getting you ground level insights on how West Bengal is reacting to the political change and what it wants next. The focus also turns to business confidence and economic expectations. Sharad Dubey, our colleague, is in Kolkata since day before yesterday, and he's getting us those updates. Sharad, what are the sentiments you're picking up?
Well, yes, this is the second day for NDTV Profit in Kolkata, and today I'm standing near the Vishwa Bangla Gate, which I'm talking about, and this place, the New Town area, this represents the modern extension of Kolkata. Be it medical hubs, institutions and technical offices, all of this action is happening in the new greater extension area. But what's there in the menu for today? We are taking in interesting snippets from the railways, the tea industry and also the manufacturing segment. We try to understand the sentiments and the expectations from these sectors. Apart from that, yesterday I did have a taste of jhalmuri and puchka. Hopefully we end our tour for Kolkata on a sweeter note by having rasgulla and sandesh.
Well, you can have whatever you want, Sharad, as long as you bring some for the rest of us. Neeraj is getting used to eating some form of mango in the morning, so I think he's developing his sweet tooth again. Neeraj, what would you say to some sandesh?
Wouldn't mind at all.
You wouldn't mind, right? Okay, all right. But on that note, let's talk about individual stocks that have posted results, right? Let me throw Larsen & Toubro in the mix. Let me throw a Hero MotoCorp from the frontline companies into the mix. We haven't spoken about Coforge necessarily on the charts, right? We've talked about fundamentals and valuations. How do these three stocks look on the charts?
Sure. So let's go in that order. Larsen, not bad at all in terms of the setup. If you see, a lot of stocks have corrected, after giving that bump up. This one's just consolidated. So just rounding the numbers off, around 4,000 on the downside and about 4,150 on the upside. That's been the range. Break on the either side, perhaps will decide the near-term trend. But if you ask me from a medium-term perspective, the setup looks very interesting. I would suggest a positional stop near the 3,900 mark. So Larsen, not a bad setup. Hero Moto, some of the other names in this space I have mentioned recently that the setup is turning a little negative. You have lower high, lower low formations, downward sloping channels and trend lines. So that remains a bit of a concern. So Hero would need a break above 50-250 for the trend to turn positive. But up until that happens, there could be some selling at higher levels. Coforge, like I said, avoid trading on the result day. But if you had a position, I would suggest a stop loss on this one close to the 1,080 levels. But from a near-term perspective, the kind of selling that you've seen, volume-backed selling, I wouldn't really suggest buying, at least from a very near-term perspective. Near-term perspective trades on Coforge, even IT for that matter, best avoid it.
Yeah, this is lovely. For a value buyer, pick will never see confirmation from a technical expert. That's just the nature of the beast, right? Yeah. And therefore, it's good to get both these perspectives. You can choose which one you like more depending on what kind of a trader / investor you may be. Bear that in mind.
And please, Coforge also, Q1, they have said that it will be flat.
It will be flat. So you've got to keep that in mind. Yeah. Acceleration from Q2 onwards. The guidance, though, is pretty impressive. Okay. So, and by the way, we were not only about Coforge, it was largely a more IT-specific discussion. There's another big thing that happened, Alex, and that is on banks and lenders, right? Wherein the ECLGS 5.0,
yes,
the credit guarantee scheme has been approved, and which is a fairly large incremental credit flow to MSMEs, which likely is positive for lenders. I would love to get Parag Bhai's opinion on what does he make of this, because frankly, not that this has been done for the Bank Nifty, but the Bank Nifty needs something to save it, right? It's actually sulking. What do you make of this announcement?
So this is a much wanted announcement. I think during COVID also government did this, and I would like to congratulate government and RBI and the entire finance ministry for doing this. During COVID also, unlike other countries, which directly credited checks to the people's account, and that created inflation in the system, our government did this thing, right? Credit guarantee. You give more loans, 20% more loans, top it up, and we'll guarantee this thing. What it says is, first of all, it doesn't affect fiscal at all. It is just a guarantee. It's off balance sheet item. Second, what it does is MSMEs get the confidence. They tell that they don't fire people. So there are no job losses. And third is lenders get confidence that, okay, I'm lending 20% more to already slightly struggling MSME due to this West Asia conflict. That time it was COVID. But I am getting a guarantee from government. It does all purposes. It is like, you can kill everything with one shot. It's a very good shot, a much required thing, and size is also good, 2.5 lakh crore plus 5,000 crore for airlines.
So this is another instance of fiscal stimulus without it being fiscal stimulus.
Yeah, and plus, the history suggests during COVID, when people were shut, okay, then also the actual NPAs out of this guaranteed thing was minimal. So even when people were shut, that tells you about India's credit culture also.
Also, MSMEs don't have this habit, right? कि हाथ ऊपर कर दिए, छोड़ो, I can't do it. Very few.
At least 90% of them will be honest and will say that, okay, right now there's a problem, you have given me a support, and now when I come back, I'll repay you.
Actually, that has been the tendency for individual borrowers as well as small borrowers as well. A lot of earnings that we have to talk about. We've spoken about several, but let's round up the list. And Varsha joining in to do just that. Varsha?
Let me start with G&G Electronics. Well, good set of numbers over here. Revenue and margins were all strong. Talking about SRF, again, if you see the fluorochemical business was the highlight over here, which was robust. Chemical was little subdued. Though they have increased capex also, that's also one of the key things to watch. Raymond Realty, strong numbers. This was due to higher collections. Aavas Finances, profitability was driven by strong NII growth. SJ Enterprises have seen spike when it comes to EBITDA margin. Talking about few counters where the numbers were weak, I would say L&T, of course, miss on revenue and EBITDA. Domestic infra execution stayed weak. Talking about GHCL, there was a margin pressure which was seen in the Q4 numbers. PNB, again, margins were lower. Shoppers Stop, if I were to talk about, losses widened due to higher expenses. So all of these stocks will be in focus on the back of Q4 FY26 numbers.
Got it. All right. Let me ask about a couple of these stocks, right? And they stand out, some of them particularly on the back of those numbers. So let me read out the list. Of Coforge we've spoken about, and L&T we've not spoken about. So let me ask you about L&T. So margin outlook is flat, and I'm talking about future now, right? You've talked about Q4.
Correct.
10% increase in order intake is what they're talking about, and so therefore revenue uptick, I don't know how much is going to get, but they're guiding towards a slightly quiet H1. H2 should pick up. What's your overall view?
So we are right now underweight on L&T, but I would say that any de-escalation in the Middle East will be a big positive sentiment booster for L&T. So because company is doing all right things, Hyderabad Metro divestment, ROE now is touching 18%, like M&M has also said, right? So all these companies are doing all right steps. So market is ready to reward them once this Middle East tension goes away. But right now we know that right now, as you rightly said, H1 will be quite muted one because. And they have also toned down, actually. If you listen to their call, they have also toned down their optimism because of near-term weakness due to Middle East problem.
Since we are on the topic of earnings, just before I get to Samit Sarkar, can I bring up one more set of numbers? And that is Raymond Realty. And just look at what the company like for like has posted in Q4. And it's a decent show. The sector may have had some iffy times, but the numbers reportage from most companies thus far is looking okay. Is the operative word, Parag Thakkar, thus far? That Q4 tak theek hai, but kya pata aage kya hoga? And what about Raymond Realty individually?
So Raymond Realty, I don't track.
You don't track.
Yeah, I
but
don't track.
15% uptick in numbers, etc.
Yeah,
Is that?
So I saw, Godrej Properties did phenomenally well. Aadhaar Realty, of course, it depends on launches and all, continues to do well, great company. So basically, I would say that Prestige or Brigade, all this, the March quarter was not bad at all. But I would say that, as we discussed yesterday, that how this duration of this West Asia war conflict, its impact on sentiments, its impact on jobs, its impact on discretionary consumption, that will play a role now. And of course, stock prices, portfolios of each individuals, because that gives you a positive momentum to buy a new property. So I would say that that way I'll be a little bit cautious. And stocks have rallied, right? After 31st March, most of the stocks have rallied 20-25%. So I'll be a little bit cautious at these levels.
Okay. Maybe that is the prudent way of looking at things as well, though valuations in a lot of cases are really good. Independent of what the historical valuations was, the actual valuations currently are not very expensive in a lot of companies. Okay, our dealing rooms talking about that, or our dealing rooms talking about something completely different. Somit Sarkar joins in with all the chatter from the dealing rooms for this morning. Somit, have things changed between yesterday and today?
Well, yes, GIFT Nifty is up 200 points, but then again, the market continues to say that 24,300 is the crucial level that we need to cross for a big upside to come in. So we need to watch out for that, because market has been, Nifty has been quite range bound, 23,800 to 24,300. Few stocks that dealers have highlighted in trade: Gopal Snacks, buy flows on the large HNI desk. The stock has been gaining for the last couple of trading sessions. It's up nearly 15%. Street is expecting a strong Q4 numbers from this counter. For Titan and Britannia, there are sell flows on the PMS desk. Dealers expect weak Q4 numbers from both these names. Prime Focus, Godfrey Phillips and Inox Wind, some delivery-based buying seen in the prominent HNI desk. They have been accumulating these counters in trade, so keep an eye out for these names. And lastly, when it comes to Eternal, the stock was down yesterday, but dealers were indicating that there were some buy flows at lower levels. That on the FI desk, long-only funds have started to accumulate Eternal at lower levels.
Interesting. Okay, thanks a lot for that, Somit. Interesting. Kush Bora, Eternal. It's a nifty name, fairly liquid name, a name that, though unfortunately, if anything, actually benefits from AI, but unfortunately has not quite seen any spark now for a really long time, right? Any bottoming out, any support levels? Is it close to anything, or is it difficult to call it on the charts right now?
Yeah, so consolidation with a negative bias. Ever since it dropped from those 300 odd levels, multiple rejections came, around those levels. It saw selling pressure, and like I've said in the recent past, it seems to have lost favor with the market, at least for now. So I would definitely keep it on my radar, but not something that suggests that of course you can go out and buy immediately. Momentum's missing, volume action really not all that great, rejection at higher levels. So yes, something that you want to be a little cautious of. So as I said, I would keep it on my radar, but not something that I would buy right now. On the downside, immediate support at 240. Positional at about 225. So watch out for these levels. As long as these are held, it might just go into time-wise correction for some time.
And Parag, maybe the idea is to not try and think of names which are necessarily belonging to the Nifty or otherwise, simply because just the mood that the market is in, all names which will see some buying need triggers, fundamental triggers. Just being in the Nifty is not a fundamental trigger by itself, because flows are anyways missing, right?
Yes.
So therefore you need to look at what individual results are showing up, right? What has impressed you the most this earnings season? For example, yesterday, one of the stocks that you talk about
Marico.
a bit.
Marico,
no, but I was looking at a financial name, right?
Aadhaar Housing.
Aadhaar Housing. What did you think of those numbers?
So great numbers as per expectation. 20% loan book growth, 20% disbursement growth. They've guided also for 17, 18% disbursement growth. Spreads are 5.82, NIMs, ROI is above 4%, trades are only 2 times. It's a good 20% compounding story, which we had bought it around 450, now it is 515. And I feel that whatever some brokerages estimates are saying 620, 630 targets, they are very easily achievable in my view.
Okay.
In Marico also, for example, very good high single digit volume growth, 9% volume growth. They are aspiring for high teen EBITDA growth. Quality company, no corporate governance issue, fantastic 45% ROC. So I think you're absolutely bang on. You cannot take a blanket call because flows are missing, as you rightly said. FIs are still selling. So I would say that it is stock by stock, stock specific, and result by result, and commentary by commentary. And that too, you have to take some commentary with pinch of salt.
Okay. Speaking of taking commentary with a pinch of salt, I wonder what FMCG companies will have to say about FY27, because the Q4 was actually particularly good. And let's talk about that. Let's in fact go across to Mahima to give you the key takeaways from what has been a pretty rosy Q4, and perhaps also the outlook for FY27. Mahima?
Right, so Alex, Q4 definitely has been rosy for FMCG. I mean, we've seen multi-quarter high, revenue growth as well as volume growth for a lot of companies across board, and overall growth, has this time been largely driven by volumes. The focus going forward also remains on volumes, and that is something which is certainly positive. In terms of what's causing the growth, a lot of this growth this quarter has come because the GST cuts plus overall freebies that state governments were offering, plus largely it's a volume-led growth and with focus on advertisement spends, which is kind of auguring this growth. In terms of the entire table of volume growth, sales growth, and the percentage that benefited, the percentage of portfolio for each company that benefited with GST is something like this. The HUL around 7.6% growth, 6% volume growth, which is almost a 12-quarter high. 40% of their portfolio benefits from this GST coming in. For Nestle, it's almost as high as 70%. For Vodafone Beverages, around 25%. For Bajaj Consumer, it's as high as 95%, for which the volume growth came in at around 9%. For Nestle also, there was a double-digit volume growth. Now, in terms of earnings at multi-quarter highs, HUL has seen sales and volume growth at 12-quarter high. Nestle sales and volume growth at multi-quarter high. Vodafone Beverages, a 4-quarter high, as well as Bajaj Consumer at a 20-quarter high. In terms of common commentary coming in from the management, I think price hikes in Q1 FY27 are unavoidable. This is because of the West Asia conflict, and that could put pressure in terms of volumes and demand. But headwinds because of this might overall see some impact on Q1. Companies are prioritizing, however, volume growth over anything is the common commentary that we've seen coming in from a lot of management of HUL, Nestle, etc. In terms of valuations, still valuations are at a comfortable level. They're below the 5-year average. If you take a look at that, Tata Consumer is trading around 80, 5-year averages at around 80 times, and a 1-year forward at 52 times. Of course, still not cheap, but at least cheaper than the 5-year average. Varun Beverages, 1-year forward at 40 times, for Britannia at 45 times, Marico at around 45 times. ITC is the cheapest amongst all at 18 times 1-year forward. In terms of stocks with highest return potential as per Bloomberg consensus estimates, Imami with the highest one at 45%, followed by Varun Beverages at 27%, then Radico Khaitan at 27%, GCPL and Dabur both at 24%. So this is the overall view of what's happened in Q4 and what one should look at going forward in Q1 FY27.
Thank you for that, Mahima. Very detailed look. The only concern is, and I think in that sense, FMCG space epitomizes the problem across the board. That the quarter is great, but who knows what's going to happen. Prabha, this is a space that you track very closely. And the fact is that if nothing else, packaging costs are going to hurt. For Marico, for example, raw material costs have not escalated to that extent versus others, but packaging costs is going to be a pain for everyone.
Yeah, so it is pain for everyone, so everybody will try to adjust to it. No? Either they will do a grammage reduction, or they will take a selective price hike, as HUL Priya Nair said, that 2-3% price hikes. And remember, these are very high gross margin businesses. So, if the raw material impact is high, you have to take just 2 to 5% price hikes to adjust for your margins.
There is no concern of demand dipping in any real way?
FMCG, it is a day-to-day need, right? So, and during this kind of scenario where commodity prices shoots up, generally the regional and the smaller players lose market share. Because the HUL will have done an inventory planning, right? Marico would have done an inventory planning. And that's why they have been able to protect margins better. And they need to pass on the price hike also lesser than a small regional player. So this, in fact, when there's a commodity inflation, the large branded FMCG companies like Marico and HUL or Nestle kind of, those guys will gain market share. And in Marico's case, it is actually the reverse, as you rightly said. Copra prices are off by 35% from their peak.
Yeah.
And that is actually going to provide a boost to their gross margin and EBITDA margin next year.
Top pick, Marico or Dabur?
As I keep saying, Marico is my structural holding. Of course, FMCGs are not that you will get 30-40% upsides. It is a 10, 15, 20% upside. हम छोटे लोगों के लिए.
Oh wow! Today, Kush Bora, what about you on any of these? Do you also have this very humble view on FMCG?
मैं तो कहूँगा भगवान करे ऐसे छोटे भगवान सबको बनाए. Very modest as always, Parag bhai. Again, very selective. I think that's been the theme. We started with that. You have to be very selective. If I look at the Nifty FMCG index itself, it's gone up quite a bit, but now seeing consolidation. So I'll be very selective. Hindustan Lever, the stock that we were discussing, has resistances around 2350 to 2375 zone. If it takes that out, you could remain constructive. Bajaj Consumer, on the other hand, very strong. So I think I would prefer this and Marico. And one stock, from what Mahima discussed, that could be turning a corner or is in fact turning a corner is VBL, Varun Beverages. For a long time, it has seen selling pressure. If it sustains above the 475, 480 zone, then I think this is in for, significantly higher levels. So definitely keep on radar. You could even consider a buy at these levels with the stop loss around these, 475, 480 zones.
Okay, the pre-open session just kicking off as we speak, and it's going to be an interesting day. So far, the implied has indicated a positive start, and those rates will settle. This big booster from the government is definitely one of help. The emergency credit line guarantee scheme has been refurbished, showing that the government wants to come in and help small companies and MSMEs. Watch out for NBFCs today. Watch out for banks today. There's a semiconductor boost in play as well. But let me go across to Chandan Taparia, Head Technical and Derivatives Research at MOFSL this morning. Chandan, very good morning to you. Let's start with the call that you have on the index. Do you think that there's enough of a boost? Frankly, the Nifty has lost its sheen in the last few weeks. All the action is in the broader markets.
Good morning. Thanks for having me. So the good part is that broad-based buying is clearly visible in the market. However, index got stuck in a range and flirting above and below is 50-day exponential moving averages. But the good part is that Dow is holding well and all set to head towards its all-time high. And I think positive effect of that may be there in the Indian market. If I need to focus on a couple of things, first, USD INR is continuously moving upwards. That means rupee is weakening. And the weakening rupee is somehow putting pressure in the market at higher levels. FI's flow is missing. And third and important part is the crude prices. So even after all these three concerns, the Indian market is holding well above 24,000. So I believe the resilience and the relative support-based buying is clearly visible. And with that, I believe the broader trading range will be 23,750 to 24,600 and beyond. For day point of view, if Nifty manages to hold 24,000, it can witness a recovery towards 24,350 to 24,400 kind of levels. If you talk about Bank Nifty index, that has been underperforming, making lower top, lower bottom. But if it manages to hold above 54,750, then short-term reversal could be seen after the profit booking of last 9 days, and it can head towards 55,000 to 55,555.
Yeah, all right. Chandan, very good morning to you. What are the individual stocks that you're liking?
Yeah, so positive on the capital goods name. We have seen decent run-up in most of the capital goods name, including Siemens, ABB, Cummins. And here I would love to recommend ABB. The stock has been making high tops, high bottom on the monthly chart. On daily chart, it witnessed a corrective or consolidative move in last 9 days and now again forming the positive price pattern. So the major trend is positive and the recent corrective or consolidation phase provide the fresh opportunity. So one can buy with support of 7150 for an upside target towards 7600. Second trading area, there is buy on AB Capital. We are quite positive on the entire capital market and infra theme. So most of the counter, whether BSC, MCX and counter like SDFC, AMC and AB Capital could be on focus. AB Capital has seen a positive price pattern, has seen the multiple support-based buying near 335, 340 zone, given a decisive close with significant surge in the open interest and the trading volume. So one can buy with support of 352 for an upside target towards 375.
How do you feel about BHEL, Chandan? Just asking about BHEL because the kind of excitement after the results, order wins, and yesterday, we had Deepan Mehta coming on the show on closing and talking about how this can really add value. How do you see it on the charts?
Yeah, Tamanna, so BHEL is quite trending nowadays, whether you look at the stock market or whether you look at the election point of view. So counter has really rallied well, has been making higher tops, higher bottom in last 20 days. Stock rallied well from 242 all the way to 399. So trend is positive. We have recommended a couple of times, given a massive breakout. And if I look at the yearly chart, in 2007, it made high near 390 and now we are back to the same. So I can see here that 20 years long consolidation breakout is visible in the counter. So I believe the major momentum could continue. However, already rallied well, but till it holds above 355, ongoing positive momentum can take it towards 395, 399, and above that, I believe 500 to 520 could be the positional target because of its multi-year breakout on yearly chart.
Okay, 4 minutes into pre-open, I wonder what UBL is doing because of the weak numbers and the weak commentary. While the Nifty is looking okay, United Breweries down about 1%. Keep that at the back of your mind. USL too, the update wasn't the strongest, but maybe you will keep an eye out on the dividend. So keep note for that, and keep an eye out on Vodafone with Kumar Mangalam Bidla appointed non-executive chairman. That management deck reshuffle, does it bring some more confidence? Well, like it or not, Vodafone Idea has gained 10% in the last 3 days. So whichever way you look at it, from a percentage move perspective, it's not done too badly. Okay, more updates and more stocks we'll get from our guests. But on the big brokerage call for the day, Nomura has downgraded Larsen & Toubro to neutral. Hiral has more details on the rationale. Hiral, the jury may be split out there, but what is Nomura's rationale?
No, absolutely. The jury is split, and what everyone is actually pointing towards is the execution, which has been weak this time around, and that's the reason why you are seeing this kind of a split, because revenue visibility will be dependent on the way they execute. Nomura, what they are saying is basically they've cut the target price to 3,940 from a 4,510. The couple of points that they've pointed is, one, muted performance when it comes to Q4. They've not been able to meet their guidance, and the margins have been muted. Secondly, the guidance that they've given for FY27, and if you talk about, Lakshya 2031, that has been muted as well, and that is what the street is not really happy about. On the back of which you have Nomura, who's gone ahead and cut FY27 and 28 earnings estimates by 8%, and that's a large number coming in there. Apart from that, what they've indicated is that they're relatively less optimistic, mainly on the back of the FY27 order inflow momentum. They're not expecting strength on that front. And if you have to look at valuations as well, they're finding the valuations expensive at the current moment, because your FY28 core earnings, if you have to look at that angle, it implies a lesser comfort when it comes on the valuation front because of the near-term uncertainties that you're looking at and the limited visibility that they have on the return on equity, if that would improve or not. So it's mainly your geopolitical, your West Asia crisis, which is actually implying to this kind of a downgrade.
For that, Hiral, let's just take a look at some of the movers this morning. Let's pull up a Coforge, and result impact will begin to be seen in the early moments of trade, and this is the pre-open session, right? Coforge now about 8% up. Good set of numbers over there. Margins have improved. The outlook is also more positive compared to maybe some of its peers. Poonawalla, FinCorp, and the numbers on the face of it seem like a bit of a turnaround story. That stock about 5% up. I want to look at Aadhaar Housing Finance and Ajanta Pharma. All of these also reported post markets close yesterday. Aadhaar Housing Finance just about 0.5% up. Ajanta Pharma, let's look at that as well. 2% up right now. J&K Bank and SRF is the other one that we should quickly look at. SRF was a bit of a mixed bag. But the stock is doing well right now, 3.5% up. Like, can we pull up J&K Bank as well, Jammu Kashmir Bank? These are some of those which reported. So all of the results have been taken pretty well. I don't know if United Breweries has been seen at the same way, because it was a bit of a weak set of numbers overall. Yeah, and you're seeing that really reflect about 2% down right now. Lloyd's Metal and Energy is the other one we should look at. Let's look at Spandana, Spurti, Financials, all of those that have been reported. Lloyd's Metal is doing well this morning in the pre-open session. Aadhaar Housing Finance, Parag bhai, because this is, I know, something that you've been tracking. Did you find the numbers a little below expectations, or you were happy with them?
Absolutely. 20% loan book AUM growth, guiding for 20% AUM growth, disbursement growth of 20%. Absolutely. And asset quality, for example, stage 3, that has improved significantly. So credit cost is absolutely under control. And it's remember, the good thing about Aadhaar Housing is 100% secured loan business. And that too, around 13.8% is their yield on advances. Around 13 lakh crore is the ticket size.
At these levels, at this valuation, still a buy?
So I am.
For those who haven't.
It is my largest small cap holding, just for the record to say. We hold
Which is why I'm asking you about the results.
We have bought at 450. We will hold on. That is the view I have.
Okay. What about on
It's a 20% compounding story for me.
20% compounding story in
Yeah.
Aadhaar Housing Finance, because the numbers looked okay. It was not firecracker. It was decent.
I like to say one thing. In lending business, if somebody grows at about 30, if there is a base already, and if you start growing at about 30%, there will be an accident at some point.
You should be worried.
You should be 20% growing business in lending. That's it. 20 to 25% max.
Yeah, double in 4 years.
And which other business is at least, let's forget about Samsung, which has hit a market cap of $1 trillion today.
Yeah, because AI.
Nvidia, those things are...
No, but then there's a company that makes toilet seats called Toto that has also now become massively important because they found an AI play.
AI detects.
No, I'm not even making this up. Please go look it up. Something that they use in their toilet seat covers, a kind of ceramics, can be used in semiconductors. And suddenly the valuation of that company has boosted.
I hope some of our large caps can develop something like this. I hope Bharti Airtel does something like this.
Kajaria Ceramics. Let's try and figure out if they have that ability.
I hope we also have some
by the way,
exciting
Kajaria,
AI story.
I must point out that, I don't know, can we pull up Kajaria Ceramics because the stock was up and about? I want to
Because of Toto.
Well, it's up 2% right now. Who knows?
All
right?
is welcome. All is welcome. Yeah. But I wonder if 908. I wonder if IT is actually down today because of the Anthropic thing as well as the Cognizant news. Nifty IT. Coforge is one thing.
No, it's up. It's up.
Nifty IT is up 1%, so not quite I think relatively unfazed, I would say, by what Anthropic and Claude had to say. Maybe it's the market moving it, or maybe Parag Thakkar's optimism is rubbing off as well. Okay, Kushbora, would you use an uptick in any of the IT names to offload them?
That's a good point. You could look at some profit booking, especially Coforge. If you did buy it at lower levels, it was hovering around that 1150, 1180 zone for a while now. So if you do get this kind of a bump up, not a bad idea, because like we've discussed, there has been consistent selling pressure in some of these names. So yeah, I would look at an exit. One stock that I want to mention that I think Tamanna just mentioned briefly is J&K. I'm glad that the ceramic story came out. I mean, where you were going was a very different angle altogether on AI.
I was not going anywhere.
People are right now furiously Googling Toto. It's a true story.
J&K Bank.
I was talking about J&K Bank. We've discussed about this stock in the past around those 115, 120 levels. Very strong moves, good volume accumulation. A long-term cup and handle formation, resistance, that too comes in at about 150. So from here on, that distance is also, quite a bit of, gains to be had. But a breakout above that will put it in a different trajectory. Very constructive on J&K Bank. Continue to hold if you bought. If not, you can still buy. Put a stop loss around the 120, 125 zone.
I do want to bring up the private banks, and so it's been a while since we've spoken about it on the fundamentals, and I'm not complaining, I must say, but we must bring it up because it's been an underperformance, right? And ICICI Bank after the pre-open session is up about 9-10%, but it's at levels that was last seen quite a while back. So is there any chance that it will move out of the funk, or is it likely to stay weak?
Bit of a disappointment, honestly. On the so I can understand the PSU banks not doing well, but at least ICICI, it should have moved. With the kind of volumes on the downside, I remain a little skeptical that the recovery could be sharp on this one, unless there is a fundamental or a news back trigger which brings in short covering rally, not just for ICICI Bank, the entire banking pack. So more hopeful for that rather than data-based moves on this. There is a sharp negative bias right now. I would look at lower levels of about 1235, 1240, and if those are broken at about 1215, the short trade risk reward ratios missed. These are more stop losses if you have a long position. So yes, the bias on at least ICICI Bank remains a little negative. HDFC Bank was always a medium to a long term play, not a momentum play. So not too worried on HDFC Bank right now.
Okay, not worried about HDFC Bank. Okay, what else is moving? So, since we spoke about the heavyweight Reliance Industries, you want to weigh in, as well as the Adani Group stocks. You spoke about this at the start of India Market Open. Does that strength in the Adani Group stocks and Reliance Industries hold?
Again, for the third day on the trot, Adani Enterprises is turning a corner. This could be a very good positional bet. I would suggest stop losses around the 2375, 2350 zones. the other names, sports, power, green, they've run up so much that you want to book profits right now and consider buy on declines. Reliance Industries too, it's run up quite a bit, but you could still accumulate this with a stop loss around the 1430 mark.
Chandan, I want to ask you about Vodafone on the charts. The decision of Kumar Mangalam Birla to now be non-executive chairman though, but that now he's in the mix after the AGR problems are behind them, will be looked at positively in a fundamental fashion, but on the charts?
Yeah, so on monthly chart, the counter is forming the cup and handle kind of pattern. However, it's beaten down if I look at the history of last 11 years. But in last couple of years, multiple supports-based buying were seen in the counter. So I believe some recovery could be there based on the recent price, can head towards 13 to 14 marks.
Okay, well, Indian markets need to find their own Samsungs, SK Hynix as well as TSMCs. For now, let's see what the Nifty is doing on open. 0.5% higher, 147 odd points, 24213. Up one day, down the next. It's kind of meandering at these levels, but it's a strong start today, so we take it with both hands. Market breadth looking positive. Midcap index up about 1%, over 1%. Small caps up 1% as well. The going is good. Nifty IT2 is participating today, 1.26. This is a surprise for me really, but well, we take it. Let's get the heat map up on the screen and see what's moving and what's not. A lot of green, very little red. L&T, the one sulk today, and a couple of downgrades or maybe more than that have come in because of the lack of clarity on Middle East, so no surprise there, but look at the green. Interglobe Aviation up 2%, Shriram Finance, the high beta Nifty name, up about a couple of percentage points. On a day when the Nifty is up, Shriram Finance pops up. Bajaj Finance, M&M, continued buoyancy. I see a lot of brokerages today talking about M&M as their high conviction idea. Watch out for that one. There is SBI up about 1%. Bajaj Auto makes the cut today as well. Max Healthcare, Tata Steel, Hindalco. So some of the metal names are doing well too. Effectively a rising tide carrying a few boats along with it, with L&T being the sole sulk, if you will, now down 3%, and with the little weightage that it has, might be impacting the Nifty a little bit. But it's more individual names doing well and lifting the market higher. Had it been a Reliance or an HDFC in the top 15, maybe the Nifty could have eclipsed that 1% mark as well, Taman.
India VIX 4% down and moving. If you had seen our show yesterday when this whole Operation Freedom first started, you would have remembered perhaps us saying that this is possibly a negotiating tactic, and that's exactly what happened 24 hours later, right? With the US president saying, I'm stopping this Operation Freedom. I don't quite care about the people stuck in the Strait of Hormuz anymore because our negotiations with Iran are going well. I want to pull up the India VIX full frame if we can. There you go, at about 4% down. The volatility index, the fear gauge, is benign today. Advanced decline ratio is looking quite beautiful, 1955 to 318. The mid cap and the small cap is looking good as well. 1.5% nearly up for the bank Nifty. Small cap 1% up, the mid cap 1% up. The bank Nifty is roaring because the government is coming and saying that, hey, we are doubling down on protecting our economy. This emergency credit guarantee linked scheme that they have announced and enhanced gives comfort to banks and NBFCs that the West Asia crisis is not going to let companies crack. We're there to help you out. Let's pull up the sectoral heat map very quickly and just show you what's working there. Do we have a full green screen? Almost. Actually, you nearly have a full green screen. That Nifty energy is pretty much flat. It's not even really showing any kind of pain or massive downtick. Oil and gas is about 0.5% up. PSU banks there are up and about 2% up this morning. Auto is doing well. Bajaj Auto ahead of the buyback announcement is already popping. You have Hero Moto, decent results. Should we look at the internals of the Nifty Auto very quickly? Let's just do that. Let's look at the internals of the Nifty Auto and the bank Nifty. M&M. Top of the charts here, 2.5%. Ashok Leyland doing well. Samvardhana, Tata Motor PV, Bajaj Auto, Hero Moto also good set of numbers. All of them looking pretty decent today. The bank Nifty also is showing good a good mood. PNB about 2.5% up. IDFC First also doing pretty decently. Let's look at individual stocks, shall we? Those who have been reporting results And that's what really matters. The fact of the matter is that you've had a decent set of numbers from quite a few companies. Look at Coforge, the entire IT pack looking so dismal, and Coforge comes in with these strong set of numbers, 7.5% right now. Poonawalla FinCorp going strong, about 5% up. Aadhaar Housing Finance, numbers were fine, but that stock has already run up a fair bit. So you're seeing a 2% downtick there. Lloyd's Metal was looking okay. Aavas Financiers, Spandana Spurti, some more in the financial space looking good. Raymond Realty, something's happening with real estate companies this quarter. All of them reporting really strong results. I want to look at Vodafone Idea. Vodafone Idea is the black sheep that is coming back into the fold of a company that is now being taken seriously, if I had to put it in a very succinct way, because now you have pedigree coming in to say, okay, we are running this company. There has been some relief from the government coming in. Legacy issues are moving behind. 2% up. Obviously, all of these are not recommendations. Please tread cautiously and with your own personal finance advisor. I want to look at some NBFC names this morning because MSMEs have got some boost. You're seeing 5-star, Ugro Cap, some of them moving quite well. Just NMDC, very quickly, they've hiked the price of some ores, lump and fine ores, by 200 rupees a ton. That's talk about 2% up. So there are enough victory stories in early morning trade today, Alex.
Yeah, you said it, Tamanna, and you've captured quite a bit of them. There are a few that stand out actually. Kajaria Ceramics, not perhaps for the reason we were talking about earlier, is up close to 4% at this juncture. Marico is doing reasonably well. Force Motors is up in about 4.4%. And the entire banking pack is actually buzzing in trade. Some of the smaller banks doing well. City Union Bank, for example, is up about 4.6%. Poonawalla FinCorp, of course, we already pointed that out to you on the back of earnings. But I would like to pull up the Bank Nifty internals just to drive home this point and to see whether it's across the board gains, because that ECLGS scheme that has been announced is proving to be a little bit of a fillip. So take a look at even State Bank of India. It's gained about 1.5%. PNB, of course, on the back of earnings is also in focus, but Bank of Baroda up about 2%. So the PSU banking pack also gaining ground. Quick question to you, Kush, on the banking pack and on Nifty Bank in particular. You were saying that it would need a trigger. Is this that trigger?
I would certainly hope so. The reason I say that is because right now, as we speak, Bank Nifty is at that upper end of the falling channel that we've been speaking about. So if we get a close above this 55,200, 55,300 zone, then you break out of that channel, and that's a positive sign. So I remain constructive. We do need a close above this 55,200, 55,300 mark, for the channel to be broken. Then you can go long on Bank Nifty. So far it's looking good, but we do need that close. So watch till the end of the day.
Watch till the end of the day. You can catch it on closing as well. But on that note, gentlemen, thank you so much for joining us this morning. A pleasure speaking with you as always. We're holding more or less with gains of about 0.5% for the benchmark Nifty 50. On that note, let me bring in Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers. Always a pleasure to speak with Manish because of the clarity of thought that he brings to the table. Manish, welcome and good morning to you. Let me start with this. Are you less concerned than you have been at any point during the conflict so far that there will once again be kinetic warfare, there will once again be a problem? And how are you looking at this entire crude and energy situation? Is it going to be a problem in Q1?
Yeah, so we are always hopeful that we'll see a diplomatic solution to this whole stalemate that's going on. But till about the point in time when everything is settled, we can't be very sure because it's one day one thing, the other day the other thing. So till about that point in time, it's better to be cautiously optimistic. See, oil is going to be a problem if we don't see a diplomatic solution by the month of June. This is my understanding. For the simple reason is that supply chain disruptions in the production side of oil in the Middle East is just too big to get ratified very, very quickly. And what the entire globe is leaning on today are the inventories in the system, and more so the onshore inventories in the system, which are getting depleted on a daily basis because the world is consuming oil. And the criticality or the critical levels of these oil onshore will get breached in the month of June if normalization of some sort of supply doesn't happen by the month of June. So today, even if the stalemate continues, we have seen $125 crude, and currently we are hovering at around 114, 115. But we are not seeing a massive spike beyond 125, even though Strait of Hormuz stays closed, and we are not seeing any solution come by as we speak. Even there are a lot of talks, but this 125 gets breached in the next 1 month if there's no solution. That is the understanding, and once that happens, then it's a full-blown inflation shock, energy shock translating into inflation and growth shock globally. I mean, that's how I would look at it. So it's better to be cautiously optimistic at this point in time.
Manish, hi, good morning. Tamanna here. Just want to talk a bit about IT and banks. The Indian IT sector seems to be resilient in different ways. It keeps getting the confidence of investors back time and again, despite every new release by Anthropic, etc. Do you think that Indian IT has now more legs to go? Is that something you're looking at favorably?
See, AI is on us, that is for sure. It's going to be relevant in the context of IT. But, Indian IT has got derated massively. Hirings are not there. We have de-hiring or layoffs that is there across the globe. Anthropic comments on a daily basis. Now they seem to allude. Last night's commentary is saying that enterprise software on AI will be executed with hands, which is manual hands, which is to say that companies like, IT vendors like Info, TCS, etc., will be relevant in the implementation of enterprise AI. There's no blanket, incorporation of AI just about as the product is there. You've got to customize it to the enterprise needs per se. So system integration is going to be there, and third-party IT vendors like Indian IT is going to be relevant. Prior to this commentary, it was widely believed that this is going to be massively disruptive and enterprise AI is going to be taken off totally. So that's basically the bullishness that we are seeing today. Nonetheless, the valuations had come off massively, and I had alluded to in the past also that zero growth means a 5 to 6% free cash flow yields. Some of the known names in the IT space are trading at those valuations today, which means that Indian IT today is reflecting zero growth, whereas you are still going to see some growth on a constant currency basis, low, single-digit sort of return, and currency depreciation added on to that. So ballpark 8 to 10% INR growth is par the course, whereas the markets today are pricing in zero growth. So you have valuation comfort, and new commentary from AI like Anthropic is basically supportive of valuations and the growth for Indian IT. So that's the bullishness that we are seeing.
Got it. Well, 1.8% up. Manish, just a follow-up here, and which is this, that if Anthropic is coming out and trying to do exactly what the IT service firms have done for years, and doing that with the advantage of owning a large language model, wouldn't that eat into that business? And shouldn't that therefore be a medium-term negative? And shouldn't the markets factor that in, never mind the valuations?
No, so competitive intensity is going to be there. But Indian IT businesses have, track record, legacy, and their businesses aren't going to fall off a cliff. You may say that they will come down on a trajectory slope on the downside, but it's not going to be a massive 90-degree perpendicular on the downside. So competitive intensity will be there, and more so on account of their own enterprise system integration tools, etc., which the AI guys will be having. So we have to be more competitive. That's part of the course. That is always there. Indian IT always adapts itself around the new technology. So that is basically the point that can be argued, to that point that these guys are going to have their own enterprise system integration softwares.
Okay, just want to understand about the BFSI space, Manish, and what the government has now announced in terms of the ECLGS scheme and some buffer really for MSMEs. Does it relieve concerns that we may see the impact of the West Asia crisis on smaller companies and then on asset quality in the next 6 months? Is this enough?
Yeah, so this is the beginning, and obviously if this whole resolution doesn't happen, then there's going to be a problem on the cost of credit as well as the quality of credit in the next 6 months. That's for sure. And that is why this ECLGS scheme comes in handy at this given point in time. And but as of now, the credit cost is holding good. So let's assume for a moment that in the next 1 month, you are going to see some normalization of the West Asian crisis. Then obviously the damage is mitigated. But we could expect more if this gets prolonged into the future from the government. As we had seen during the COVID times also, government always comes out with a helping hand for the MSME space with, loads of moratoriums and all of that. So this is maybe just the beginning, but the numbers, etc., for the BFSI space is pretty good. There's no credit or asset quality concerns so far, either on the corporate side or on the retail side per se. And even the MFI space is now turning the corner. So credit growth in the system FY27 is going to be better than FY26, 13 to 16%, depending on what you believe is going to be the number. And it's a proxy, it's an India proxy, beta play. If you are looking at a beta play, then BFSI is the beta play when it comes to India proxy. So all of these things are contributing to the bullishness.
Okay. Manish, thanks so much for taking the time out and giving us that perspectives, or those set of perspectives, if you will. Really appreciate your time this morning.
Thank you.
All right, we will dwell a little bit on that big news of the morning, which is IT. We spoke about Anthropic and what's happened there. The other piece of news around IT is Cognizant reportedly planning a large-scale restructuring as a part of its transformation strategy, with possibly a number as high as 15,000 jobs being cut globally. The belief is that India could see a very large impact as well. Before we speak with Neeti Sharma, CEO at TeamLease Digital, Puneet Johnson with the details of the same. Puneet.
Well, thank you for that. Definitely 12 to 15,000 jobs expected to be impacted because of the latest cut from Cognizant. And it's also important in the India context because globally, Cognizant has roughly around 3.6 lakh employees. Out of that, 70% are in India. So India could see a material impact for that. And what we've seen in the US, a lot of the companies, reducing their work count. It's almost crossed the 3 lakh employee mark that have been laid off from giants like Meta, amongst others. Now it's started to make its way into India now. Now, given this context, you could see some more impact on hiring from IT companies, and hence an impact essentially on the hiring trends in companies like TeamLease, amongst others. So some perspective on that will be important. We also had Jefferies come out with a very interesting note on Anthropic making its way into the IT services segment. And Jefferies had just made one key point that this move could underscore the relevance of IT service offerings on a broader scale. So that being the context, it's important to get some perspective from hirers and essentially get some perspective on what could be FY27 in terms of hiring trends for the IT service companies.
Thank you for that, Puneet. That was, well explained on the headwinds which hiring in IT is facing. And Neeti Sharma, CEO of TeamLease Digital, joining in to give us some perspective. Now, Neeti, of course, we don't officially know how many jobs Cognizant is going to cut. We do know that they are going to save money because of their Project Leap, which includes employee severance. This is what their official communication says. We don't know to what extent. But what is the hint that you are getting, or what are the signs that you are seeing on ground in terms of hiring with large companies?
Morning, Tamanna, and thanks for having me here today. There is obviously disruption, but I would not call out saying that there is no hiring happening at all. There is hiring happening. I think what's happening is a very structural shift to how and what things can get done and where hiring is actually happening. What is changing is not about volume hiring. I think strategically, all the services companies are looking at AI first skills. They're looking at hiring freshers, junior workforce continuously gets hired, which is really about bringing in new talent, new skill sets. Yes, what is getting laid off, I think the segment that is getting impacted the maximum is the middle level segment, which has largely been people managers. So right now, I think all the services companies are looking at layoffs where people are not able to bring in outcome linkages to their roles, but wherever there is outcome linkage, and obviously wherever there is domain experience and expertise, those people are definitely continuing to stay with the organizations and even get hired across other industries.
Okay. I just want to understand this. So Neeti, okay, that point is well made. But if you look And good morning, this is Alex here. If you look across the value chain, right, and at the various levels, if you're sitting outside an IT company, you're trying to understand this, you understand this from the perspective of entry level, middle level, and then the top level, right? So most of the disruption, can you explain at what point in the value chain are you seeing that? And what do the numbers tell you as well?
Yeah. So I think right now the highest volume of disruption is happening in the middle level. Largely people who've been, people managers, roles which had just managed thousands and thousands of team members and not really the outcome that the team members had to deliver. I think that's where the highest volume impact is happening. Let's also understand, we've been talking about layoffs for the last 2 years in the IT industry. The first lot was really about taking off the volumes, which is at the bottom of the pyramid. People who were doing redundant, continuous work, those were the ones that got laid off. Then we heard about some leadership changes that are happening. And the past few months and quarters, we've heard a lot about middle level impact that is happening in terms of shift and, and in terms of layoffs. So yes, currently the disruption is at the, I would say about 15 to 20 years or 25 years of experience. People who are in the 38 to 45 age group, they are the ones who are getting impacted the highest. And the only reason is because all these services companies have typically worked in a pyramid structure, which would mean that we needed managers to manage a set of people who were team leads, and then they were managing a lot of other people. So that's where really the highest volume impact is happening right now. The other impact, as we see, is because we are, all these services companies have made huge investments on AI and agentic AI. People who have not been able to upskill themselves or stay relevant to the shift in the skill set, I think they are the second lot that are getting impacted, because I have seen in the past 2 years, all the services companies have made massive investments in skilling and upskilling the workforce. So people who have not been able to upskill themselves and stay relevant are the ones who are also getting impacted.
But Ms. Sharma, in the same breath, you are telling us that the mid-level is getting impacted. I mean, it's counterintuitive, because the overarching belief is that if AI is impacting one level of personnel, particularly in IT services, but otherwise, it is at the bottom layer. You're saying that is not happening, it's happening at the middle level.
Yes, that's also because let's understand the middle level workforce is obviously way more costly than people who are coming into the workforce right now. So what's happening, and let's understand, all the graduates who are coming out of engineering schools right now will be AI first graduates. So we don't have to spend as much time in telling them to adopt AI. I think their adoption is the highest. If you look at the various levels, the leadership is the lowest adoption. And the junior most entry level workforce is the highest adoption, because they are AI native workforce that is entering into the labor markets right now. Plus, they will come at much lower cost than what the middle level layers are. I think you have to understand that what AI is doing is actually disrupting our own experiences and what we've been doing for the past many years or decades. Right? So today, I think there is no premium because I have been doing software development for the past 20 years, right? The premium is, can I do coding or efficient coding much faster, much more productively with the use of AI? And there I think anyone with no experience can also be, a star performer.
So Ms. Sharma, just give us an absolute number to help understand. If Company A was hiring 1,000 people 3 years ago, how many are they hiring now?
If they were hiring, I would say if they were hiring 1,000 freshers earlier, now they're probably hiring about 600 freshers, or that the plan is to hire 600 freshers. So if we hear all the services companies calling out very high volumes of fresher hiring, that'll kick in very soon now. But if they were hiring laterals for I would say, skill sets which are more conventional, there I think the hiring continues to be only about 25%. The hiring is continuing to increase in the newer skill sets, which is AI/ML coding, which is data, and a lot of data analytics, engineering, architectural work is being hired for. Plus a lot of work happening on governance and cloud and security. So I think while we are talking about conventional skills on software development, and typically that's where the IT services hiring was happening, today the shift is also about skills and who they're going to hire.
Fair enough. Okay, thank you so much for joining us and explaining all of this perspective in such detail. Neeti Sharma there of Team Lease. What stands out? If 1,000 freshers were being hired 3 years ago, it's 600 now. The hiring of lateral entries and more skilled people in the IT sector has dropped to 25%. But let's talk about PNB. PNB has surged almost 3% after posting its Q4 results. We're going to be speaking to the management shortly. Piyush, what's worked for PNB this quarter?
Yes, Tamanna, PNB actually came out with PAT numbers, which was essentially aided by lower OPEX and lower amount of provision, because their core income, which is the net interest income, was actually down 10% in other income as well. But we have with us Mr. Ashok Chandra, the MD and CEO of Punjab National Bank. Sir, let me start by asking you on the ground, how has the loan demand been? How has the RAM segment grown in Q4 FY26?
I think if you see the performance for this entire year, we have done exceedingly well in the MSME. Q1, Q2, Q3, every quarter, we have grown at more than 20%. And that is the reason our YOY growth in the MSME segment is more than 20%. Retail, excluding IVPC, we have grown at more than 18.2%. So core retail activities are happening in the bank. Agri also, priority sector agri, we have grown more than 16%. So all those things put together, I think we have seen the good traction that is happening in the RAM portfolio. In fact, that was one of the focus area for the bank. If you remember our discussion in the very first quarter result, I think we had mentioned that bank will put a lot of focus on the RAM. Bank will put a lot of focus on activities through the branches so that the business should start generating from the branches. And we are very happy that successfully we have driven those activities. Even the corporate loan book also, we have grown at 11.6%. So all put together, bank has put a robust credit growth against the guidance of 11 to 12%, which we had given last year. We had grown at more than 12.7%. And that is the reason this year our guidance is revised and we have given a growth rate of 12 to 13%. And I'm very sure we are going to cross this guidance.
In fact, Ashok sir, if you could give us some sense on the corporate loans that are in the pipeline in terms of disbursals and sanctions.
Corporate loan book also, we have sanctioned more than 4 lakh crore under that corporate book for the different segments. And in that, 1,18,000 crore of disbursement is still pending. So that disbursement will happening in this financial year onwards. And that is the loan book, which is already there in the system. In this month itself of this financial year, we have sanctioned more than around 25 to 30,000 crore. So we have a very, very strong the corporate pipeline also. When we are putting a lot of focus on the RAM, at the same time, being one of the largest banks in the country, we are mindful of our responsibility to take care of the corporate sector also. And we will not hesitate to take part in that growth journey. We are taking that share and growing at more than 11%.
We also want to assess, the RBI has come out with final ECL guidelines. In terms of PNB, how much amount of provision will the bank need to make to comply with the ECL norm, and subsequently what would be the impact on your credit cost, because you're supposed to now categorize loans in the stressed asset category as well.
See, one thing I will tell you that we have just brought in the digital tool to measure that ECL framework. I think there are different models are there. We are working on that. And final number, I think we need to wait for 2 quarters. I think October, I will give you the exact number which is going to come out of this ECL transition. But I will tell you another aspect of that. See, we have 2,045 crore of floating provision. In this quarter, 270 crore we have kept. And earlier also we had that amount. So all put together, 2,045 crore is parked as a floating provision for ECL migration. Second aspect of looking to the migration is, today we have 17.74% is our CRAR. We have CET1 is 13.62%. Now, if capital point of view also, if you see, we are in a very, very strong position to face any requirement that will be there for the ECL transmission. Third aspect is that we have more than 97% is the provision coverage ratio. So all these things put together, I don't see any challenge that is going to come in our bank for moving towards the ECL from 1st April 2027. Absolutely, it will be very, very smooth journey and without any challenge in our balance sheet.
And finally, in terms of your capital raise plan for next financial year, do you have any? Because ECL guidelines are supposed to be met, and there could be some impact from the West Asia conflict as well on the bank's balance sheet.
No, we don't require to raise any capital. In fact, last year also, we had taken the approval for 4,000 crore of CET1 and 4,000 crore of AT1 and 4,000 crore of Tier 2 bond. But we found that the capital is not required with the growth of 13-14% in the credit also. I think we have sufficient cushion to grow. This year also, with this CRAR, we don't require any additional capital to be there in the to be required now.
Thank you, Ashok sir, for talking to NDTV Profit. Back to you, Tamanna.
Thank you for that, Piyush. Let me go across now and talk about Bajaj Auto. Auto Pack in focus today, and Bajaj Auto is set to announce its Q4 results. Puneet, what is the street penciling in? And I think results on one side, buyback is where all the excitement is, isn't it?
Well, most certainly. It's come after a couple of years, and it's also been very rewarding for shareholders at this point of time. So in terms of numbers, a 29% volume growth is helping over a 20% growth essentially in revenue. So you're seeing EBITDA also rise to 4,643 crores and maintain that 20% EBITDA margins for the 8th straight quarter this time around. Profits also expected to rise by 2,615 crores is the other key kicker. But as you rightly highlighted, it's mulling a second buyback in the last 2 years. For February 2024, the buyback was announced at 10,000 rupees per share. And looking at the current share price, whoever had given it at that time to the company, and essentially the company bought back their own shares, had benefited because of this, because stock's not gone anywhere post that in the last 2 years. The buyback amount was almost 4,000 crores in 2024 and 1.41% equity was bought. So expect a similar amount or slightly more higher than this is the expectation on the street. 2022 in June, the buyback was at almost 4,600 rupees per share at that time. And it was also almost a 2,500 crore buyback. So the buyback will be something that will dominate the news flow in that sense. But you also have to watch out for the integration of KTM since the company has now gone into bankruptcy and Bajaj Auto has a majority stake now. So there is expectation of an update there. And finally, in terms of what they are expecting in terms of FY27 as an outlook, because the base year for H2 of FY26 is quite high given the GST rate cut benefit.
All right, Bajaj Auto in focus. That's going to be one stock to look out for. Already 2% up before those numbers come. But so will Godrej Consumer Products. Reporting its Q4 earnings today. Varsha, what are the key expectations? Okay.
Right. So, Tamanna, overall, the growth is expected to be largely in line with what the management had guided, because that is what the Q4 business update is also indicating. Indonesia business is something that's recovering for them this quarter, continued to recover this quarter as well. In terms of estimate, revenue is expected to rise around 9-odd%. EBITDA may rise around 12-odd%. Margins may slightly improve to 21.7% versus that of 21.1% earlier. And net profit is expected expected to rise around 40% as per the Bloomberg estimates. Now, in terms of Q4 update, consolidated EBITDA is broadly, the growth is expected to be, near that, close to double-digit growth, largely in line with revenues, what the management has said. In standalone, they're expecting double-digit sales growth, volume growth in high single digits, and EBITDA margins likely to sustain overall in Q4. Indonesia business underlying volume growth is expected to be in mid-single digits, and where Africa, US and Middle East business is concerned, they're expected to see double-digit sales growth and high single-digit volume growth. In terms of commentary that's coming from the management in terms of commodities, they've said that high crude prices have created upward pressure in Q4. They expect cost of around 6 to 9% because of high crude prices and remain cautious on war situation. Now, key things to watch out for will be in terms of commentary that they give in terms of price hikes, considering that the overall impact of crude itself is around 6 to 9% plus packaging cost will add to that. Volume growth going forward, how will that picture be looking like considering the price hikes, and overall a pickup in urban demand, and further detailed commentary in terms of impact of the West Asia conflict. So this is the overall view of what you can expect from Godrej Consumer earnings.
Got it. All right. A key one to track. Now, we have to slip into a very quick break, but before that, just take a look at the markets. The Nifty 50 now trading with gains of just about 0.5% or so, having given up a little bit of ground. And I do want to pull up the advance decline ratio just to see if the gap between advances and declines has narrowed just a tad bit. No, it hasn't. Not substantially at the very least. You have advances that have held, but declines actually have gone up just a tad bit. We have to slip into a very quick break. We'll be back on the other side to talk semiconductors. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracked.
Right, I want to do a quick market check before we get to our next conversation. It's heartening really that markets have done well, but the Nifty now coming off a tad, still about 100 points up and 0.5% up, but come off from the highs of the day. I want to pull up the Nifty heat map if we can very quickly, because remember at start we had just L&T in the red. Everything else was doing fairly well, and IT stocks were there up and about. Indigo, Trent, M&M still looking fairly robust, but that line of red has definitely spread. HUL, Titan, Power Grid and ONGC also seeing some pain points. But let's talk about what's happening in West Bengal. We have our very own Sharad Dubey there. He's on a spree in Kolkata, speaking to all of the top companies. Here's his conversation with Taga Rail Systems, headquartered in Kolkata and closely aligned with the state's rail and infrastructure ecosystem. How is Pritish Chaudhary of Taga looking at the big change in government in West Bengal? Listen into this conversation.
We are joined in by Prithvish Chaudhary. He's the Deputy MD at Taga Rail Systems. Good morning, Prithvish. One first query is the West Bengal looks like it's seeing a renaissance. And the sentiment, especially the infra push, and your company is also there. So how do you see this? What are the interests looking like?
So first of all, I think this is a great development for the state. I think for the first time in 5 decades, there is a government that is aligned in the state with the center and the policies of the center. And as we know, the government in the center has been always very pushy, very aggressive, and very visionary on the infrastructure sector. So we do hope that that translates into the state, especially on the urban mobility side, the metro systems and the urban mobility in the state. From our perspective, hopefully should undergo or should see a very rapid advancement.
Well, there is a lot of bullishness coming in, but Pritish, I just want to understand from the Bengal business community, what is the request coming in, especially on the schemes looking like, or any bottlenecks which need to be cleared?
So I think the industry sector as a whole has not been a very key focus area for the local, Bengal governments over the many decades in the past. So we do hope that a lot of the industrialization schemes that are seen in states like Maharashtra or Gujarat, something similar is made available in Bengal to really attract more investment to Bengal and facilitate that ecosystem really to develop for industrial growth.
All right. That is something which everybody is talking about. Even the entrepreneurs are talking about, get West Bengal at par with other states also. But apart from that, coming back to your company itself, how's the order book looking like? And, which segments you are seeing a good demand trends coming in?
So from our perspective, the passenger rail systems segment, which includes the metros, the Vande Bharat, that is looking very, very strong. The Indian economy at large is looking strong, and the freight loading targets still remain at 3,000 million tons, which they were. So the freight demand or the freight wagon demand also in the midterm or in the next few months should start ramping up again. As a company, we have kind of worked a lot, and we are investing now a lot to really get into the high-speed rail segment, which in the new union budget, multiple new corridors were announced. So from our perspective, from a Titagarh perspective, the passenger rail system segment, including the metros, the commuter trains like Vande Bharat, and hopefully someday in the future high-speed trains, is something that we are very bullish upon.
Also in third quarter, since right now your numbers are also not out, there was some wheel set constraints coming in. Street was a bit concerned. Pritish, I just want to understand, that pain is still there, or is it bottoming out?
So that pain is slowly starting to bottom out. Another good news on that front is that our own wheelset manufacturing facility, which is in a joint venture with Ramkrishna Forgings, that's starting trial production soon. And in the next couple of months, we should start commercial production by June, hopefully. So, that's a permanent once and for all solution to the wheels problem on the freight
Exactly.
side.
That's an interesting take. And abhi महंगाई थोड़ी बढ़ गई है, and we have seen that across, talking to a lot of people from Bengal as well. A little bit of inflation cost is coming in. So that also coming in your industry as well?
So we as a company, we as an industry are quite insulated from the inflations because most of our contracts have a price variation clause in them. So the price indexes which move, they are actually passed on back to back to the customer. So we as yes, quarter to quarter, there may be some differences because the indexes don't always move exactly as per the actual price movement. But on an annual basis, on a year-round basis, we always pass on the benefit or the disadvantage of the cost to the customers.
Fair enough. I'm just looking at this train, how it's actually looking like. It's pretty, like there's a child in me which comes out, but it's wonderful to see how these Vande Bharat trains are, coming. I'm just going to ask about this because let's take a 3-year, 5-year perspective. Of course, there is a geographical advantage in Eastern India, and there is a need for that infra, which we already discussed. But how's the vision looking like? Any numbers we can see for the next 3 to 5 years, at least on the industry front?
So that's actually a model of our Vande Bharat sleeper train. That was one of the first models that was designed. And we should be able to launch the prototype by Q3 of this financial year. And as for future plans, as I mentioned, the high-speed segment is something that we look at getting into with a lot of vigor, especially now, with this new development in Bengal. We're hoping that the industrialization, the industry incentivizations and industry policies really undergo some dramatic shift, which enables industries like us and more companies like us to really expand, our manufacturing footprints.
Okay, so you can see that entire conversation with Titagarh on all of our social media platforms as well. But talking about policy push, the cabinet has now cleared 2 new semiconductor units under the India Semiconductor Mission, taking the total approved projects to 12 with over 3,900 crore in fresh investment. India's push for semiconductor self-reliance is taking shape. We're going to be speaking to one of the key players, those who will be moving ahead with this project in this leg. But Rishabh is first joining in with more details.
Absolutely, a very sort of crucial approval that is coming from the cabinet for 2 new semiconductor projects. This takes up the ISM 1.0 count from 10 projects to 12 projects. So whatever little funds were left in the first semiconductor mission, that has also been utilized now. Now onto the details. The larger chunk yesterday came in. About 3,100 crores were allocated for the Crystal Matrix project. Now, what this is essentially is it is a new chip facility that will be set up in Gujarat. They will be creating what are gallium nitride wafers, and these will then find application in a lot of micro LED displays. And this is, of course, a burgeoning market in India. You have outdoor displays also sort of really growing at a big speed. So that is where you'll have some sort of a domestic demand being satisfied within India as well. No more imports. So cutting that import bill, that has also been a priority of this ISM. The other one is, of course, Suchi Semicon, a much smaller allocation to that, about 868 crores. For that one, this is, of course, an OSAT facility. OSAT is essentially a chip facility that will help in a lot of assembly and testing of these chips. So Suchi Semicon will be also in Gujarat, a smaller facility at about 868 crores. This will find applications in, of course, a lot of consumer electronics. So ACs, TVs, mobiles, fridge, all of those will be covered under the Suchi Semicon approval. So that's what you have coming out of the cabinet when it comes to the semiconductor mission.
Thank you for that, Rishabh. I actually want to go across to Ashok Mehta. He's founder and chairman at Suchi Semicon. Mr. Mehta, thank you so much for joining us. Can you give us some color, some details of what is going to be your involvement in this semiconductor project by the government?
First of all, thank you very much to NDTV Profit to invite us. And thank you very much to our Honorable Prime Minister, respected Sri Narendra Modi ji, Ashwini Vaishnav ji, and whole the government ecosystems. Actually, this inspirations by our Prime Ministers at the time of COVID, whole world stuck by the shortage of the chips. And at that time, we thought, why not enter in this business? We start our research, and in 2025, we start our pilot line. We actually main focus for us, definitely we are small, but our key focus is in that consumer electronics, because the consumer electronics market is very huge in India. And India now export a lot of consumer electronics. Secondly, our target is auto industries, because the maximum chips consumed in India is the 2 key factors. One is consumer electronics, and second is auto industries. And it's a start of the semiconductor line, because when you start your education, you start with that schooling and college, and then you are going for the PhD. This is the entry gate. OSAT is the entry gate of semiconductor chips. And we successfully start that pilot line from our facilities. And after supporting of the government, we are expanding up to 3 million chips a day. Our target is to reach 3 million chips a day to acquire that whole Indian market and global market as well.
Mehta, point taken in. You've described your journey quite well. But the question is, from this point on, the latest initiative by the government, what does that do? What is your role in it? And 2, you've described what your intention is to expand capacity. What is the timeline within which you're going to get that done in?
Within 3 years, we will reach to 3 million chips a day.
Okay. And the earlier question, which is the latest scheme by the government?
The government latest scheme is that 50% incentive by the central government and 20% by the state government of Gujarat.
Okay.
For the capex.
Okay. Okay. So put the numbers down for us, Mr. Mehta, so that we can understand what the benefit is. You're saying that you're expanding capex. You're saying that the government is supportive. What is the total benefit? If you can explain that to us.
Almost in our project, this phase, we are getting 521 crores as a subsidy from the government of India as an incentive.
521 crores on a particular base, Mr. Mehta, I'm presuming. Here's the question. In percentage terms, what kind of benefit does that cause? Part one. Part two of my question is, this is the first set of benefits that have come in and they are very lucrative. Would companies like yours or other in this space, I believe there is a lot in that belt, need further support a year, year and a half, 2 years down the line? Or now there won't be a need for further support from the government side?
Government already give us that support for the 3 years with project we already submit to the ISM.
Right.
That is for the first phase. And for second phase, our target is for that in that next phase is that advanced chips. And that also we will submit our project in ISM 2.
Okay.
Yes.
And therefore, is there a policy in place to give further support, or now companies don't need support after the initial phase of support is done?
I think if we are expanding in the similar line, if no support, there is not a problem. We can do ourselves. And if we are going for that advanced packaging, then we need the support. And government actually very supportive to all the chips industries who want to come in that advanced line. If you have the good ideas, new chips, they will support to us definitely.
I'm just wondering what's the timeline for us to actually become self-reliant in this space for your project, for example, because there is an announcement right now, there is some amount of government support subsidy, you talked about 521 crores, but what is the feasible timeline before India can actually have a clear semiconductor play or be Atmanirbhar in semiconductor chips?
Minimum it will take 5 to 10 years.
5 to 10 years. So minimum 5. 5 to 10 years also has a huge range between it. So minimum 5, maximum 10.
Actually, the India now 100% import depend on import.
Yeah.
And once you start the industries, it will take time. This industry is not a normal industry. Today you start and you get the benefit and you make the money. It's not the way. This industry is totally different. You have the patience because the qualifications, it's a crucial part of all the semiconductor chips. So it will take time. And now India import almost, I think, $20 billion import per annum.
Mr. Mehta, but specifically for a company like yours, the reason why there is an entry barrier, and if you look at fabricators around the world, right, you're talking about companies that make chips, it's not so easy to do. And they're at the front line. Of course, they're making really, really tiny chips. And the reason is you need land, you need technology, you need pure water, and there's a lot of disruption in tech. So my question to you, Mr. Mehta, is that if chips continue to get smaller and smaller, for companies that get in at the fag end of the value chain and try to build up, wouldn't they get left behind?
Actually, you are talking about that fab, the clean water, tech, everything need for that fab. We are not in the fab, we are in the OSAT. So many things, and we have a very good collaboration with that 2-3 big companies. Last 2 months back, we had done one MOU with that Japan's big company, ROM. He is having a very big infrastructure worldwide, and they second with us, and we are the partner in India. So manufacturing the chips and supply in the Indian market and global market. So for us, there is not a challenge in any places. We cross all the barriers.
Okay. Well, Mr. Mehta, it is good to know this. It is good to have this distillation as well, that if the expansion happens in the same space, then there won't be any support needed because what has been done is enough. Just one last question. Would you want anything else to happen from the government side to ensure that companies like yours or others stay competitive globally?
Actually, the demand, global demand is very big. And due to that geopolitical, everyone need the China plus. So India have very good chance for the global market and Indian market also. And government is supportively very nicely. So I thanks to the government to support this all ecosystems.
Well, Mr. Mehta, wishing you all the best for this and more. May you succeed. May the country succeed as well. Thanks for taking the time out.
Thank you very much.
Thank you. Well, guys, it's interesting because I think there was a lot of question marks around what is it that India as a country is doing. And these are steps that the government is taking. Because I think when we spoke to Kane Semicon as well, when we went to their plant in Gujarat ahead of the budget, I think that is the same reflection that came in, and Suchi Semicon seems to be saying the same thing.
Yeah, OSAT is the key, right? When you're talking about creating a foundation that you can build on, fabricators might come later. And of course, Tata Group is
one of the original
You need a lot of
ones.
capital.
So the 5 to 10 years, my only question mark is that technology is changing so fast. And I'm sure that this is something that is being taken into consideration. That you can't start a plant today and a facility today with an X plan and hope that it will stay and be consistent till another 10 years. You're going to have to be nimble because you never know when the whole game changes very quickly. And I'm sure that's being put into consideration.
Yeah, and maybe, Tamanna and Alex, OSAT is the less risky form right now because no matter what will come out of the fab, the OSAT facility will be able to effectively slice and dice it in the usable form.
That is absolutely the key. And why TSMC is valued at what it is, by the way, because as a fabricator, it's able to move quickly. It has these massive facilities, and if one becomes redundant, they're okay. They're moving very quickly, but the margins are very, very low. So I asked, by the way, a fund manager that invests in global entities as well, and at that time, this is shortly after the COVID-19 pandemic and the shortage in semiconductors, and I said, why do you not invest in Taiwan Semiconductor? And he said, they make wafers, they make these chips, their margins are also really thin.
Wafer thin.
So therefore, and there is a lot of
he missed out
in the tech. He did. But then he was investing in SaaS companies at the time, which was giving him 80% EBITDA margins.
No, but then, that's, so maybe you ask him again today, that do you think you have feeling FOMO, and he possibly has. All right, so, okay, having said that, there's so much more to explore in this space, and we'll continue to do that and try and bring you all the expert views here on NDTV Profit. But for now, let's go to another expert. Ashwini Agarwal, founder of Demeter Advisors, joins us this morning. Ashwini, very good morning to you. Always a pleasure to speak with you, as always. I'm going to start by asking your assessment of what is happening geopolitically. Yesterday was a bit of a fear, right, with this new Operation Freedom, and then the US seems to have stepped back. They're talking about coming to some kind of a conclusion. Would it be overtly optimistic to say that it's possible that a month from now, maybe we would see an end to the crunch in the Strait of Hormuz, if nothing else?
Morning, Tamanna. Thank you for having me on your show. The statement that you made about, hostilities easing and things getting back to normal a month from now is what the market is pricing in as well. I think if you look at the policy stance of the government as well, where fuel hikes have largely not been passed on despite the state elections getting over. The government also seems to believe that maybe a resolution is around the corner. There's no point passing a shock to the system, and better to kind of ride it through, see it through. And I think the market is doing the same thing. So yes, I think both the US and Iran are obviously looking for off-ramps. They're looking for a solution that makes sense for each of these countries, solutions that they can sell to their own voters and their supporters. And I think that hopefully will come through. I mean, obviously, if it doesn't come through, there's a big price to be paid, especially by energy importers like India, to a certain degree, Southeast Asia as well. And I think the issue here, and which is something that I worry about a lot, is that we're dealing with two very unpredictable regimes or two very unpredictable stances, both at the end of the US and at the end of Iran. And we don't know whether this will come through or not. I think both countries are looking to find a solution, but whether finally something will come through or not, because they're very hard stands on either side.
Ashwini, and good morning, this is Alex. From the Indian perspective and for investors that have had relative patience over the last 2 years, a lot of people that got in after COVID-19 couldn't contemplate this idea that you couldn't get returns for 2 years, and they've experienced that. But now they thought that something would give. Things were looking up at the start of 2026, and you're pushing that down the line. The question is, how far would you have to wait? Do you anticipate that it will be for the extent of 2026 because of the kind of damage that has already taken place?
Alex, morning. The issue really is energy prices, right? We are a very large importer of energy. Middle East is a very large market for us. If there are disruptions in the Middle East that continue for, let's say, the next 6 months, there are going to be significant earnings downgrades, and there is going to be significant demand destruction in the country. I mean, you take the two together, obviously, equities is going to be a painful trade for 2026 as well. So it all rests on that single variable, right? I mean, does the Middle East open up? Does supply of oil and gas from the Middle East normalize? We can live with higher price of oil and higher price of gas. I mean, it doesn't need to go down all the way to 60, but at 80 and at full availability, that's what is an acceptable outcome for an economy like India. But, shortages or the current prices that the government is paying or being forced to pay for energy is not acceptable. So, yeah, I mean, for retail investors who've kind of been in the market for 6 or 7 years, a 2-year wait of no returns might seem very trying. But for people like us who've been around from 1992 and have seen decades of no return, if you look at the period between 94 and say 2003, or long droughts between say 2010 to 2013, it's okay. It happens once in a while. You will go through a period of 3 to 4 years where you make no money, possibly lose a lot of money. And then, you lick your wounds and you come back. I mean, that's the nature of the beast.
In fact, I think in some fashion, for people who maybe came in 2020, 21, they've still not lost money. People who come in maybe 24, late 25 would also have lost money. Very well put, Ashwini. And yes, that experience speaks. Just wondering, Ashwini, do you believe that from where we are right now on the earnings argument and the valuation that we are, plus the fact that there are macro concerns here, could the indices give no return period in 2026, or could we see a downdraft over the course of the next 6 to 9 odd months? Never mind the fact that we haven't done anything for the last 18, 19 months.
Neeraj, it's purely a function of what happens to the Middle East crisis and oil and opening up the Middle East economy. See, again, it's not just oil. Price of oil, availability of oil and gas. It is the fact that Middle East is a very big market for us. Middle East sends a lot of, repatriation dollars into India. And Middle East is a source of very large FDI flows. So, Middle East not being in a good shape is terrible for India. And the longer this stalemate continues, the more it hurts us. And that's a reality. And like we discussed at the start of this conversation, right, that the market is pricing in this will end. The government actions seem to suggest that the government believes that this will end. All the news that's coming out of the US, out of Iran, seems to suggest that both parties are looking for a solution. So let's see. I mean, if it comes through, then I think you might have a better outcome. You might have a situation where it might be a flat to a modestly positive return. I would look past the near-term earnings downgrades, in case a solution comes through, because then the events are in our history, and then let's say the March quarter or the June quarter earnings one can ignore and one can look forward. But if it doesn't end, then you could have a situation where the market is down 10-15% from here by the end of the year. That's entirely possible.
Ashwini, I was hearing your commentary a short while ago and said people should be ready for even larger losses this year. Is it this year that you're talking about, specifically this period? And do you see that period continuing where one should brace for portfolios in the red?
I mean, like I said, it's all about energy, all about the Middle East. If the situation doesn't ease, we have a problem. Tamara, the second problem that we have, and we don't really have a very good answer to it, is that does AI lead to a crunching of job creation in India? For the last 2 decades, IT services jobs have been a huge driver of job creation in the country. And at least in the listed space, we are seeing that new hirings have reduced significantly. For the larger companies, they're near zero. For smaller companies, they've slowed down. GCCs are offsetting this to some degree, but we don't have exact data on employment generation from the GCCs. We know that AI is doing part of the job that entry-level programmers would do. How important is that in terms of a job creation for India is something that we don't understand. And that, I think, could be the next shoe to drop in the Indian context. So I think we have challenges ahead of us. The government is correctly pointing to manufacturing and focusing on a lot of high-tech manufacturing, providing subsidies, providing state support. State governments are coming forward. So that will obviously help. And one will kind of lift and the other will kind of ebb. That's the nature of the beast. And in the middle, you might go through a short period of, let's say, a year and a half, where the markets are despondent, nothing happens, especially if the Middle East crisis doesn't resolve itself.
So then, just part 2 of my question, and you've laid it out beautifully, Ashwini, that these are the risks, risk 1, risk 2, etc. How do you mitigate those risks? If energy shocks and impact of AI on jobs are your 2 glaring risks right now, how do you build a portfolio that doesn't lose as much as everybody else? I suppose that's the best that you can do right now.
So, Tamanna, what happens is that markets always give you opportunities. There will always be sectors which are being given up for dead. So, if you recall, through 2025, I kept saying that we are looking at microfinance as an area where we see valuations pricing in the worst, and at the margin, things are starting to improve. And, pretty much a lot of the microfinance companies have given you returns between 20, 30, 40% over the last 12 months or so. That's not a bad return for a market that's not done well. So I think, we are looking at opportunities in manufacturing, in small cap stocks, in retailing, in energy distribution, gas specifically. We are looking even at IT services. I mean, in IT services, one could make an argument that while it is not great news for employment generation, IT services companies could be fine if they are able to find niches in where they handhold their customers in using the large language models that are coming through. So you might have the employment pyramids changing from a shape of a pyramid to to the shape of a diamond with a bigger kind of a central layer, which is more akin to consulting. So I think some of these opportunities are there. I mean, we are looking at them. Haven't found a lot of sectoral conviction just yet. But yeah, there are bottom-up opportunities which are there. Companies. I mean, I think look for despondency. That's what I say. That's always been something that excites me. You look at good businesses which are going through a very tough patch. And you can say IT services is one of them today, and look for ideas within that space, or look for ideas within other spaces where stocks have come off a lot. I mean, the number of stocks which are down 50, 60, 70% on a 2-3 year basis is quite large. I mean, and then you have to have the patience to hold on and accept that a few quarters will not tell you the story, but the next few years might see the story play out.
To that point, right, and the opportunities that might arise, specifically on energy, and the fact that this shock, for what it's worth, has caused the administration to say, hey, you know what, we need to take some steps to mitigate this if it occurs in the future. So do you see opportunities in, for example, coal gasification? We've been talking about it for so many years now. Do you see, for example, in nuclear, where the government has made certain moves, where are those on the fringe opportunities that could become big if that transition has to happen?
Yeah, I mean, those are areas. I mean, battery storage opportunity, whether it's more of thermal, whether it is more of nuclear, whether it's more of, other technologies that might help us, energy saving devices, coal gasification, as you pointed out, recycling to a large degree. I mean, these are all opportunities. These are all things that we will have to do to insulate ourselves. I mean, I think, to some degree, we've actually been well ahead of our initial plans on the capacity that we have in solar and in wind. But battery will, I think, follow. Once that happens, then I think, stability of the power supply from the perspective of grid stability will improve. I think nuclear, I mean, I think that's a real opportunity. Can we get to another 20 gigawatts of nuclear in the next decade? I mean, things like that. So these are all macro opportunities. Stocks are a little more tricky because you have to figure out who is priced to perfection in that sense, and where the opportunity of earnings is higher than what the street is pricing in right now. I mean, if stock prices are full, then there's no opportunity to make money. So I think there's an opportunity for business and there's an opportunity to make money, and sometimes the two are not the same.
Okay, Ashwini, always a pleasure having you on with us. Thank you so much for joining in today. Market will always give you opportunities, so it's up to you to spot them. And of course, we're sitting here to help you do that day in and day out. Thank you once again for speaking with us. But a lot of stories that we're tracking this morning: high fuel prices and widening ATF cracks are forcing Air India to cut back international operations. Danish now joining in with exclusive details. Danish.
Well, that's correct. As per the data provided exclusively by OAG to NDTV Profit, we are seeing that Air India has massively reduced its international capacity. In fact, in April, Air India's international flights were reduced by 22%. And in the month of May, this capacity has been reduced by 20%. And even in the next month, it is expected that the capacity will get reduced by around 7 more %. One of the major reasons is obviously the ATF and the widening crack. But besides this, if we look at it from a passenger's perspective, all major flights of Air India to North America, especially to the East Coast, they have been completely chalked off the board. And besides that, even the frequency to India to Vancouver flights, even they have been reduced. And if we look at how the cancellations are for the European routes, over there it is kind of a mixed bag. Certain flights to big airports like London Gatwick and London Heathrow, the schedule over there is still as it was earlier. But if we look at the connections from other cities like Amritsar to Birmingham and other such places in the UK and other parts of Europe, those flights have majorly been reduced. So although if we see, because in fuel prices, Air India is forced to reduce its international operations, and we wrote to Air India twice and we did not get any reply from them.
Okay, all right. Thanks so much, Danish, for bringing us those updates, the implications of the energy situation right now. All right, let's talk about an important update. And the cabinet, as you know, has cleared the ECLGS 5.0. This is essentially the credit guarantee scheme that targets 2.25 lakh crore rupees in fresh credit flow. Let's bring in Piyush, because he's spoken to a few people from the banking industry and he's got details of what this is going to mean for the banks as a whole and lenders as a whole. Piyush, what are you picking up?
Yeah, good morning, Alex. ECLGS 5.0 is being considered as a net positive for MSMEs. Bankers say with 100% guarantee on incremental loans to MSMEs, there is a likelihood that they will come out and lend more to MSMEs, especially those who are particularly hit by the West Asia conflict, export-oriented MSMEs into the oil, gas, pharma segments. And bankers also say that now with the 100% guarantee, in the last time this scheme was introduced was in COVID, and this time around they don't feel that a lot of NPAs will come out of these loans, and they also don't feel that very selectively the MSMEs will actually tap this particular scheme. We do understand there is some clarity that is required because, Alex, a lot of NBFCs give working capital loans, the term loans, not working capital loans. loans. So the cabinet has informed that the current extension is being given to working capital. There is this limit, 20% limit of Q4. So it is important to understand whether this extension is also applying to term loans which are given by NBFCs, and there are a lot of NBFCs which particularly focus on MSMEs. For example, Ugro Capital is there. A lot of HFCs also do MSME loans. So that is something we need to track and get some clarity on. Back to you, Alex.
All right. Piyush, thanks so much for that. So, net positive, certainly for the MSME space, but there needs to be some clarity on whether this extends to term loans as well. Speaking of, we're more or less holding where we started off, 0.5% gains for the Nifty 50, but a few names have given up ground, and the broader markets are holding, which is a good thing.
Okay, that's all the time we have on this edition of India Market Open. From all of us here and all of those who helped put the show together, thank you so much for watching. Stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me very shortly will be Mahima Bashajani. And over the next hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the numbers that are flashing on the top of your screen. You can also call us, talk to us directly, as well as our experts for the stock-related queries as well. But before we do that and a lot more, quickly take a quick check of how the markets are doing. It's a time where earnings seasons are taking precedence over stock reactions, and you're seeing that today impact on L&T as well. So quickly pull up the heat map for the Nifty 50, and stock was down 3% at the start of the trading session. The guidance under Lakshya 2031 is not giving any kind of enthusiasm to the street, and that continues to be down today as well. Missed margin estimates as well, and the volatile period, because the war impact continues to hamper L&T at this point of time. You're seeing some decent reactions coming in on Indigo as well as on Trent at this point of time. Indigo is up almost 3.5%, Trent's up 3.1%, and M&M is seeing a good reaction today post brokerages coming out with its ever positive rating yet again on this counter. They've also upped their new launches guidance as well yesterday. Bajaj Auto results come today, and buyback amount expected as well. Apart from that, the other counter that will be in focus in the auto pack will be Hero. The conference call will start very shortly, so we'll start putting out those lines as well. But important quarter for Hero, results have been good. Commentary continues to be the other aspect to watch. In terms of sectoral heat map, also very quickly, if we can pull that up, Nifty Auto, rightly as I mentioned, for all those stocks and the reasons, is up, biggest gainer today. So is the PSU banking index. FMCG is down today by 0.6%. It has had a good run over the last couple of weeks, but the advanced decline ratio is the other one. We've been consistently highlighting that market's been divided into two zones. Essentially, second half has also had their share of reactions, and advanced decline also starting to show that trend. So currently up almost 2.5 to 3 times in terms of the advances versus the declines. And the mid and small cap also shows you that perspective at this point of time. So Midcap index up over 1%. Small cap continues to be in the green as well, is up by 0.7 odd % as of now. So the mid cap is dominating it. And finally, the BSE 500 before we start with the show. Embassy Developers up 20%. Coforge is up 7% after a strong set of numbers by the company. HFCL, Vodafone Idea, third straight day of up move. While on the loser side, you don't have too much of a reaction coming in. Only Credit Access Grameen and L&T as we highlighted. So it's a good positive screen today as of now. Let me welcome in, our guest as well as our, Avinash Gorakshankar, founder and head research at Avinash Mentor Services, and Vaishali Parekh, vice president technical research at PL Capital. Both of you, thanks so much for joining in. Let me just go across, and take the first query right now. This one's on Bajaj Finance, and actually Priyanka from Mumbai, who is sending across quite a few queries now and is a regular viewer, is holding 22,000 shares of this counter. She's holding them at 709 and asking a one-year view. Now, Avinash, she actually got in at quite a decent price and has amassed a very good, decent quantity as well. Would you recommend her to continue holding on to this counter at this point of time? Just in terms of portfolio positioning also is quite a big, but what's your view?
No, I think, Puneet, you can definitely continue to hold on. See, I think numbers for Bajaj Finance have been very stable, and I think asset quality has also remained pretty, robust. I think the coming year should be a good year. In fact, from the conference call commentary and the numbers which were reported, I think very clearly, over the next 6 to 12 months, we believe that NBFCs like Bajaj Finance should do reasonably well. I think interest rates have also remained stable, plus consumption, post the GST cuts have actually helped, more demand move quite positively. So I think, over the next, say, 6 to 12 months, we could look at prices of around 1,050 to 1,100. Hopefully, once the market, sentiment also improves. But I think definitely the traction looks pretty positive, and we should expect better numbers for 26, 27.
Got that view, Avinash. But let's go across, take the next query now. And this one is coming in from Ramesh, who's from Chennai. Now, his question largely being a short-term outlook on Ramratna Wires. He's looking at the current share price, Vaishali, asking what could be a target to watch out for. What's your opinion? Very good morning to you.
Hi, very good morning to all of you. So Ramratna is already in a good upward trend. I think even with a short-term perspective, continue holding with 410 as stop loss. This is likely to do 480 levels. So the trend is very strong. One way upward rally. So I would say keep a stop loss and continue holding.
Got that view. But the next question coming in now is from Mulli from Bangalore. And his question is on travel food services. He's bought it at 1,270 rupees per share. Asking Avinash what should be his time frame for the next 12 to 18 months if he should continue holding. Would you recommend that?
Yeah, I think he should hold on. See, it's a very well-established business model where, travel and food services operates in most of the airport, where, most of the customers walk in. And I think it's a well-established, robust business model. So I think, despite the fact that valuations are not cheap, they're fair to expensive. I think it's a very unique business model, which is growing quite rapidly. So I would suggest that 12 to 18 months could be a good time frame where I think the investor could expect a decent risk reward. So continue to hold.
Right, well, let's pull up J&K Bank now because the counter continues to be in focus on the back of quarterly results. And to get just a very quick perspective, I'm being joined by Amitabh Chatterjee, the MD and CEO of J&K Bank. Mr. Chatterjee, very good morning to you. Thanks so much for joining in. Firstly, sir, congratulations on a decent set of numbers for Q4 as well as for FY26. I just want to get a perspective from you to start with on how has been this year itself in terms of your advances momentum, because we have, of course, seen it grow in this particular year, but your yield to advances has slightly come down to 8.98% versus around 9.56. So I just want to understand if we could expect this is largely led by what we've seen in terms of the repo rate cuts by the RBI and expectation that it can be maintained at this 9% level.
Yeah, good morning and thank you very much. There are two factors essentially. One is, of course, what you said because of the 125 bips of repo cuts. The other was, if you would remember, the state of the UT of J&K went through a very bad phase last year, right from the beginning of the financial year. What happened in Pahalgam and then later on the floods and flash floods and all. So because of that, there was quite a bit of impact on the retail business that we have, which constitutes almost 2/3 of our advances portfolio. So because of that, the high yield retail advances got impacted, which we compensated through the business in the rest of India. The rest of India retail business did well last year, but the volumes were not that high. We compensated the business by corporates, but you also know that corporates are quite competitive in rates. So combination of these two brought down the yields a bit, but now things being absolutely normalized here and the retail business picking up. So I'm very hopeful that we'll be able to improve the yields in the coming year.
Got it. And Mr. Chatterjee, very fair point on the concern that you highlighted. And at this point of time, you of course got the tax benefit in your yearly number of a growth of 13% profits. Largely, the other numbers you were able to maintain at least a flattish number compared to FY25. So is the expectation that FY27, given that there's a good base now for FY26 numbers, you should expect a growth, and what could that look like? Because that will also have an impact on your NIMs as well, which fell this year compared to last year. Again, basis of what you said. So retail share, is it expected to pick up? What's the overall growth that you are looking at? Is the 10% number achievable? And will that translate into NIMs going back to FY25 level?
See, the guidance that we have given is 10% on deposits and 12% on advances. This is the same that we gave last year. But then you see that we have grown by almost 12% in deposits and 17% in advances. We wish to continue with the same. The guidance is slightly conservative considering whatever is happening in the world at the moment, the geopolitical situation. Being a little bit conservative is, I believe, is okay. But the internal targets are always to improve upon whatever guidance we give, except for the NIM. I think we have surpassed all the guidances that we had given last year. And NIM, of course, I told you the reason. So going forward, the retail will be the focus. Retail advances, we will continue. The pipeline in the corporate is good enough to cover for the entire year, right in the beginning of the year. So I do not have any issues related to covering the guidance on advances, but we want to do it in a better way through retail.
And Mr. Chatterjee, just as we wrap up this conversation because of paucity of time, just a quick question on what you're expecting, in terms of the other cost controls as well. Now, provisions you maintained, at a very low level this year. FY25, of course, was almost negative. And just in terms of your cost to income, has improved from 57% to 56%, but still a little higher than average for the public sector banks as well. So is the target in the medium term to go to that 52% mark, and any kind of initiatives that you're doing for that as of now?
See, if you look at the cost, essentially the major part of the cost is the staff cost that we have, and it has been coming down steadily. So the cost to income ratio, I believe, will be less than 50% very shortly. So if you look at this particular quarter, the cost to income was only 47%. Overall, for the year, it is 56%. So we are very hopeful that the cost will be contained, and major cost being the staff cost, it is already contained. It is coming down steadily every year through the more and more use of technology and lesser number of staff involvement, and staff being involved for businesses more. So I'm very hopeful that both the costs coming down will continue and the cost to income ratio will also improve.
Got it. Well, Mr. Chatterjee, longer chat definitely warranted, but thanks so much for joining in, giving us time today to NDTV Profit and giving us your perspective on the results as well as what's the expectation for next year. We look forward to our next conversation. But stocks down 2% today, but largely in the last 1 year, given also the challenges, stocks done well for investors, up over 42% in terms of returns. But let's get back to your stock-related queries as well. And Anjali from Hyderabad is patiently waiting by for as a next caller. Anjali, very good morning to you. What's your query?
Yeah, very good morning to all of you, sir. Actually, I'm having Indraprastha Medical Corporation. So I'm having 550 average of 600 shares.
Okay.
Okay, so what is a short-term or long-term view on this? Shall I hold or is it?
So you saw the charts, Anjali, when you bought into this counter, or was it a fundamental?
Yeah.
Okay, you saw the charts.
Long back, like almost 8 months to 10 months back, I bought this, sir.
Got it. Well, Vaishali, let me come to you then on Indraprastha Medical Corporation. She's been holding on for the last 8 months, currently sitting on a loss. Would you recommend her to averaging down or exiting the position or continuing to hold?
No, I would not ask to average right now, but well, I think it is on a recovery mode. So I would say keep a stop loss of 390. And right now it is at a minor resistance of a small moving average. Once you see the stock moving above 415, this can give you a target of 460. The actual strength actually lies only above 460 level. So till then, we will just call it a bounce back and a range of 390 to 460.
Well, hopefully, Anjali, that answers the question. But Avinash, just before we move forward, you heard the management of J&K Bank, and it's been one of the counters that actually done well in the last 1 year, given the correction that we saw at the start of 2025. Do you have an opinion on the counter? What should investors do with it now?
No, I think, the management commentary appears to be very positive. And I think there are valid reasons why, earlier the bank's performance was impacted. But I think going forward in FY27, Puneet, I think the bank is on a very strong wicket. I think in terms of asset quality, in terms of disbursements, in terms of the overall growth opportunity, I think despite the fact that, large and a majority portion of its revenue comes from only one state, the balance sheet is managed very well. So our sense is that around 130, 31, one could definitely look at it from a year's perspective. I think one could definitely expect a decent risk reward. But clearly, I think the first quarter of FY26-27 will be the near-term trigger. Markets are expecting that possibly, after this quarter comes in, there will be some surety about the earnings growth, which we believe could be at least 15 to 16%. So definitely a good buy, but from a slightly medium-term angle.
A fair point, and got that view, Avinash. Next question coming in on SBI cards now. Vaishali, Gunsekharan from Tamil Nadu wants to know if it's a good time to buy for the short term. What do the charts say?
You're talking about SBI cards, right?
Yes, that's right.
Just a minute. So currently, I think it can be bought. 620 as stop loss and look for a target of 680.
680. Got that view. But viewers, you can also call us for stock-related queries at this point of time. We, as well as our experts, will try to get you a perspective on your stock-related queries as well. The number is flashing on the top of the screen. That's the landline number. And let's actually go to Vijayawada now. And Bindu actually has a stock query for us. Bindu, very good morning to you. What's your query?
Very good morning. I'm holding 50 shares of Safari Industries.
Okay.
At 15.10.
Okay.
The stock has dipped a lot
Got it.
for a few months.
And is this a long-term bet, Bindu, or a short-term one?
I can hold it about like 6 to 8 months.
Okay, 6 to 8 months. Got it. Well, Vaishali, let me come back to you then. Limited time frame, but Safari Industries, what's your opinion on the counter now? Should Bindu wait by, and can she see her buying price yet again of 1510?
So I would say the stock seems to be too beaten down, but quite in an oversold zone. So I think you can average it out and wait for a bounce. Don't be in a hurry to exit. I think the stock should recover and come towards 1500 to 1600 levels.
Got it. Well, the next question, coming now on Eternal, and our viewer holds 438 shares at 228. Now, wants a long-term view on this particular counter. So, Avinash, What's your opinion on this one for Birandeep? Because, I mean, I wouldn't say beaten down, but has corrected from the highs and is at a very interesting juncture now for investors who want to buy into it, might have missed the previous rally. How did you view the Q4 results? It's a continuation essentially of opening out much more stores in dark stores, continuing that food delivery model. What's your opinion?
No, I think, see, Puneet, from a broader perspective, I think the company has done well. Fourth quarter numbers were much better in terms of profitability margins. And I think Blinkit has been a very strong performer. I think clearly, the market opportunity when they launched Blinkit was not anticipated. But today, I think Blinkit is growing by leaps and bounds. And going forward, maybe in the next 1 or 2 years, I think you could see a bigger market opportunity being tapped by Eternal. So, in the short term, the stock will remain volatile. I think after the results, the stock has seen a fresh wave of selling. But fundamentally, I think the business model has emerged stronger. And I think now, with a annuity kind of business model, at least the next 2 years, hopefully, if demand continues to be strong and the kind of, volume growth we see in the Blinkit division, I would not be surprised that a significant amount of, upside is possible. But I think you need to keep a time frame of at least 12 to 18 months. Maybe on a quarter-to-quarter basis, it's not possible to, make a significant amount of alpha. But the next 2 years are going to be very promising for the company.
Right, and thanks for the detailed opinion, Avinash. Hopefully, our investors are benefited from that. So is our viewer, and hopefully, Birandeep, that answers your question. But another caller from Hyderabad, Anjali, has a stock query for us. Anjali, good morning. Welcome to the show. What's your query?
Good morning. I'm holding Elecon Engineering from long time, maybe from 1 year.
Okay.
So I'm holding 53 shares at the rate of 558. The stock was down from almost after I bought. So now it recovered and now the price is the same as what I bought. So is it good time to sell or should I wait for more upside?
Got it. And, very fair question. Avinash, from the January low, stocks up almost 50%. I think it hit a low of almost 360 odd levels. Any view on Elecon Engineering? Should Anjali exit or continue to hold?
No, see, I think there were a lot of exceptionals, in the fourth quarter numbers. And I think if you strip off those numbers, then the performance has been pretty decent. And I think the management, outlook in the commentary was also quite positive. In fact, the management has said that, orders for some time had been postponed because of some midterm kind of, correction which happened in their marketing process. But I think now orders are trickling in. Hopefully, the first quarter for this financial year is going to be quite better. And just to add, there are a lot of ultra HNI investors like J&K Bank who already has a very significant position here. So my sense is that, despite the fact that the stock has not performed for the investor, keep a view of at least 12 to 15 months. I think in this space, Elecon has a very strong, dominant market presence. And I think a good amount of risk upside, risk reward is very much possible. So continue to hold and keep the conviction for the next 12 to 15 months.
Got that view, but let's go across, just quickly address the FNO setup for today, and largely the Sensex continues to be in an up move. We've highlighted that L&T is one of those key stocks that's taking the brunt today. So is HUL, while Indigo continues to power through at this point of time. But individual stock specific action is also very interesting. You're seeing longs being built up on Coforge and SRF. Coforge, of course, on the back of earnings. SRF had a couple of key updates. Markets taking the one was a good one was a negative one. I think the market clearly telling you which one it likes better. But in terms of shorts being built up, L&T is one of the bearers, unfortunately, at this point of time. So is United Spirits. But longs now being unwinded on Hitachi Energy after a strong up move from almost 22,000 or to 33,000 stocks carried through. Seeing some build up of, essentially seeing some unwinding of longs that were built in the system, and shorts being covered on Force Motors. They've launched new Traveler and markets liking that aspect. Also on Indigo. So those are some of the key highlights and some key counters that are buzzing in trade today. But the next question is actually coming in from Arnav, actually from Delhi, and his question is on Hero MotoCorp, bought at 5043. Avinash, before I come to you, just let me address the flashes on the bottom of your screen, because of course the results are quite positive, over a 20% growth, and now the con call is now on as we speak. It started at 10:30. margin guidance is something the company has maintained at that 14 to 16% level because they expect that the capex will continue in Euler Motors in the two-wheeler side as well for VIDA product development as well, and they've committed almost 1,500 crores at this point of time as well in terms of capex for the next year. Now, 14 to 16%, a bit, and actually it's quite in that range for the last 3 to 4 years, given the new ventures have taken precedence. They're planning big capacity expansion in EVs, so you would expect a lot of those 1,500 crores to go into the VIDA capacity, and it has performed phenomenally well at this point of time. Sales have grown almost 7 to 8x of the FY25 level. But just some important flashes, they are looking to launch, of course, new commuters, high displacement bikes. But the 125cc space continues to be one which is dominated by Bajaj, which will also come with earnings. The entry level continues to be an important one for Hero MotoCorp. So some more commentary on margins will be something to watch. Price hikes have been taken in a calibrated manner in April. But Avinash, how do you view the stock now? Because we've started to see a fresh up move on players like TVS, market rewarding players like Ather as well. And I think we have questions. We'll take that in just a bit. But what's your view on Hero? What do you recommend for Arnav to do at 5043?
No, I think he should continue to hold. I think, as you rightly mentioned, if the margin trajectory has been maintained at 14 to 16%, it's good because typically, commodity prices have gone up. And despite that, the management is pretty confident of maintaining its margins. And I think volume growth is going to be the key driver. I think the demand for two-wheelers after a long time has picked up. Hero Motor has got a large presence in the rural markets. Most importantly, it's a free cash flow generating, company. So capex of 1,500 crores is not going to be a problem. They will fund it entirely from their cash accruals. And I think the market should obviously look at new product launches. I think apart from adding on to their electric vehicle product bouquet, new products, in the IC segment also are important. And that is where I think markets would look at it. But net, I think the next 12 to 15 months look pretty positive. So I won't be surprised. The stock will move up steadily. Maybe, after the results, the stock may see some corrective action. But fundamentally, the company is on a strong wicket. So we would prefer that wait for the next 12 to 15 months. You should get a decent risk reward.
Got that view, Avinash. But viewers, as well as Avinash and Vaishali, time now for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in on Tata Tech. Now, Mahi holds shares at 727. Avinash, yesterday's earnings were quite positively surprising in that sense as well for Q4. Should she average down since he's holding at 727?
Yeah, I think keep a time frame of at least time frame of 12 to 15 months, and you can average at the current level.
Honasa Consumer is the other one. Srinivasa Rao is holding 100 shares at the level of 4110. Wants to know whether to continue to hold or sell. Vaishali, your view on the charts?
So Honasa, I think continue holding for a target of around, I think, 370.
Mahesh from Andhra Pradesh is holding on to Moisture Vaishali. He's holding shares at 218 and holding 264 of them. Should he continue to do that?
Keep a stop loss of 195. Once it crosses 210, the next target would be 220.
Inox Wind, 5,000 shares bought at the levels of 110. Continue to hold, exit from long-term view. Avinash?
No, I think continue to hold.
The next one coming in is on IKO Energy for the short-term perspective. Vaishali is the question Sneha is asking, is it a good time to enter IKO, IKIO?
Sorry, not tracking this.
Okay, the next one is on Vari Energies. Our viewers bought at the levels of 3240. What should be the target price going forward? Vaishali, on the charts, continue to hold, sell?
Continue holding. Look for a target of, keep a stop loss of 3100 and look for a target of 3500.
Shiv Kumar from Bengaluru is holding on to TCS, Infosys as well as Coforge. Avinash, should he continue to hold on all three of them or be selective now?
No, I think TCS and Coforge he can continue to hold. I think Coforge has pleasantly surprised the markets and the stock is up. So I think continue to hold TCS and Coforge.
Okay, CG Power, what should be the entry price considering the rally that we've seen in this counter? Vaishali, your view on the charts?
So currently it is 821. I think 800 would be 790, 800 would be an ideal level.
Padma Kumar is holding on to 13 shares of Maruti at 14,850. So he's currently sitting on a loss. Asking if he should shift to Voltamp, ABB or Siemens. Avinash, if you can address both those, should he actually shift out of Maruti into Voltamp? I know the stock was down 20% yesterday.
No, I think my guess is that in Maruti, I think, we should hold on. I don't think, markets would further drag it downwards. I think in the Voltamp, numbers have not been great. So continue to hold Maruti for the next 6 to 12 months. He can average even at the current levels.
Okay. Cochin Shipyard bought at the levels of 2498, down already 30%. What should be the next course of action for Dinesh? Vaishali, your view on the charts?
I think average out at these levels and wait for it to bounce because it's already in a trend.
Got the next question coming in, from Pawan from Bangalore. He's holding on to Patel Engineering at 38. Vaishali, he's holding on to 1,000 shares. Should he continue to do so? Currently sitting on a loss.
I think it's showing signs of revival. So I think average out at these levels and look for a target of 32. So this way you can lower your cost.
Got it. Well, that is the end of the first round of rapid fire in this edition of Fast Profit. But Avinash, Vaishali, stay on. Lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
You're watching NDTV Profit. I'm Mahima Vachharjani, and the stock we're putting spotlight on today is United Breweries, in focus on the back of its Q4 numbers. To discuss as to how the quarter has gone by and how things are shaping up for FY27, we're joined by Vivek Gupta, the MD and CEO of United Breweries, joining us now. Vivek, first of all, thank you so much for taking out the time. Despite of Q4 being a challenging one, you've managed to grow your volumes at that 4.11%, which is much ahead of what the street was, the analysts were expecting, right? Just want to understand as to how much of this is, a structural change versus, what you've been doing so far.
I think, you have absolutely picked up right. We are quite buoyant on what happened in the Q1. I think, you have absolutely picked up right. We are quite buoyant on what happened in the Q1 on the category growth recovery. In the Q1, the category grew double digit on volume growth. As UBL, we grew 4% on primary sales and almost 8% on secondary sales. So we reduced some inventories. But the good part is the category is back on growth and high single digit growth. If you remember, the last 6 months of the second half of 2025 were tough for the category because of weather, rains, as well as, the affordability issues. I believe the amount of work which Brewers Association of India and which as a UBL we have done with many governments to talk about the affordability of beer has really worked. In the last 6 months, the number of states who have made positive intervention to reduce differential tax on beer and spirits is one of the factors why beer category is back on growth. The second big factor is the innovation. As we talked, we launched our blockbuster innovation of Kingfisher Smooth. The third factor is the premiumization. I'm also glad that this quarter we grew 16% on premium. For fiscal year 2025, our premium growth is 21%. There was one quarter, which was OND, October, November, December, where premium growth was almost flat. So I think the category is back on growth. At the same time, it has been a tough quarter because the West Asia war has disproportionately impacted the beer industry and UBL. Our cost of sales, as I mentioned, has disproportionately got impacted. Our exports in profitable market, because Kingfisher is iconic brand for India and especially for India's outside India. And that has got impacted. The Indian rupee has become weaker. So despite all these challenges, and as a company, we are preparing for long run, we continue to invest in category growth. So I feel that the most important thing this quarter is category is back on growth. The premiumization story is back. We are getting very good support from regulators to reduce the differentiation of beer taxes, which is most crucial. But at the same time, we have to prepare as a company to really manage this macro situation, which is not in our control. So there's a lot of action we are doing internally to mitigate the impact.
Got it. So Vivek, in terms of this entire impact of West Asia conflict, right, it's going to be on your raw material, somewhere in supply chain as well. Just want to understand as to, considering the escalation in cost as a percentage, how much of a price hikes are you expecting going forward in Q1 FY27, and if that will follow through in Q2 as well? Just want to get that sense as to what is the percentage of increase in cost, and what is going to be the percentage of increase of price hikes that you're going to take?
Yeah, I think our estimate is the total impact is around 400 to 500 crore on our cost, which is almost 10 to 15% depending on this. This business is state by state business because every state has their excise policies. Some states, you can take pricing. In other states, you have to work with the regulators. We almost have 30% of our business where UBL has a very strong share. Our brands is very strong, and we still need to continuously work with the government to get the pricing. So Telangana, Andhra, Tamil Nadu are the three states where we have big business. Our brand is very popular, but we need to do more work with regulators to take the pricing. Because unlike other industries, we cannot just go and pass on the pricing to consumer. The second is affordability on beer is extremely important. So we don't want to create a problem for the category growth because where we just pass on the pricing to consumer, I think we need to do more work with the regulators because every 100 rupees which consumer pay on beer, 70 goes to the government. So I think that is where they have to reduce the taxation so that affordability for consumer is maintained and the category growth continues to happen. So we'll be doing a lot of work on that. The third area is we need to have our own cost and productivity program. So we are questioning every single cost. We are doing a lot of work in making sure that we are more disciplined as an organization and we are more efficient and more productive. So it is a big challenge, but it needs a big, unique intervention by some of these state governments. And I'm also, through this channel also, I would communicate that states like Telangana, Andhra, Tamil Nadu needs to really help industry so that, we can have a much more sustainable business and growth.
Well, that was the management of United Breweries post their quarterly results, as Mahima highlighted some of the key aspects to watch. But stocks, taking a beating today, at least down 3.7%. But go across, take the next question from Akash on ICICI AMC. And his query largely being a medium-term one. He's bought into very close to the IPO price at 2165. I think it was the IPO price. And wants to hold for the next 2 years, Avinash. And the question largely being from him, is this the right levels to buy a little bit more after the 50% run? What would you recommend?
No, I think, ICICI AMC should definitely do well. I think it's a very strong annuity-based business model. But I think, since it's moved up by almost 50%, I would say that, it's better that he buys it in a staggered manner. Look at some dips if you get and accumulate the position slowly. Maybe do a small SIP kind of approach and then gradually accumulate it and stay invested for the next 2 years.
Okay, all right. We've got Yamini calling us from Chennai. Yamini, a very good morning to you. What's your query about?
Good morning, Mahima. My query is regarding Tata Power.
I have 10 shares of Tata Power at 413 rupees. And I'm looking to accumulate it at the current levels, and I have a long-term perspective. And is it also advisable to take an SIP on the same?
Okay, all right. Got your question. I'll take this up with Avinash. Then Avinash, your view on Tata Power from a long-term perspective and whether SIP doing this counter makes sense.
Yeah, I think power generation continues to be a very strong sector where a lot of interest is coming in, and I think looking at the kind of strong demand from the data center opportunity, typically this summer has also been very hot, so I think you're going to see a lot of power demand coming up. In case of Tata Power, I think it's better that the investor takes at least a 2-year view and gradually starts an SIP, because clearly over the next 2 years the renewable space is also going to be a very big opportunity for Tata Power. So I think, rather than buying everything in one shot, it's better that you buy it in a staggered manner in small pieces and then stay invested for the next, say, 2 to 3 years.
Got that view, Avinash. But next question now coming in. Now, Vaishali, this one's for you. It's from Anil Singh asking if it's the right time to enter Aether Energy. Now, stock's been in an up move, up over almost 200%, 2x in that sense from its buying price. And yesterday was up on the back of results. Today, almost down 4%. Would you recommend that, Vaishali?
Yeah, I would say ideal level would be around 800. It can consolidate. We can see some profit booking. So I would say accumulate between 880 to 800 levels.
Okay, the next one that we have is from Rajesh Maheshwari, who's writing us from Indore, asking about Globus Spirits. He's got 70 odd shares at an average price of 1019. He says, what could be the prudent course of action for this stock from a short-term perspective? Is there more steam left, is his question. Vaishali, he's not very far away from where the buying price is. Slightly downtick is what he's seeing. But do you think it can bounce back to his buying price and maybe give him some profits in the short term?
So I would say this stock has given a one-way rally right from 800 to 1150. So it can consolidate and we can see some profit booking coming to 1000 levels. So as long as 1000 level is held on, I think the stock is pretty strong and we can see a further strength going up to 1250. So depending on this levels, one should take a call. If you want to book your profit right now, you may do so because little bit of profit booking cannot be ruled out.
Got it, Vaishali. But the next counter is on Tarsin's product. It's a very small counter. But Avinash, just trying my luck here because Deepak is holding on to 354 shares, bought at 350, and he's in a loss of almost 35% right now. What would you recommend, Avinash? Because I know you track a lot of smaller companies as well. It's been a rank underperformer, down almost 70% from when it listed back in 2021 or 2. Any view here?
No, I think, in the short term, I don't think there are going to be any major triggers. The investor has purchased the stock at a slightly, elevated level. So I would say that, if he wants, he can switch over because I feel that within the banking space, stocks like Federal Bank or typically a Bank of Maharashtra would give him a better alpha. As you rightly mentioned, the stock has underperformed significantly. And in such kind of cases, it takes at least a couple of quarters or sometimes even more to, recover. So my sense is, something like a Bank of Maharashtra or maybe a Federal Bank would be a better choice because year growth is clearly evident. And I think the next 6 to 12 months could be better. So I think a switch would be better, but definitely this company is unlikely to recover in the short term in a very big way.
Okay. All right. We've got Muin calling us from Bengaluru. Muin, a very good morning to you. What's your query about?
Good morning to you all. Yeah, I have Greenfly, 808 quantity at 291.22. I bought it at a higher price. I want to know if this counter will reach the buying price within a month or two.
Okay, got your question. I'll take this up with Vaishali then. Vaishali, in a month or two, do you think this can bounce back to 291 levels?
Well, then I would say keep a stop loss of 240. This stock has to once again go towards 280 and sustain about that. So if that is the case, then it would go to 300, 320. So stop loss of 240 and continue holding.
Got that to view, but stocks done well actually in the 3-1 perspective, but as Vaishali said, 280 for Greenfly at this point of time. Sunny Sharma from Kolkata is asking in this question, and it's a very topical one on L&T. Now, he's bought 50 shares at almost 4,000 rupees, so bought it post the correction. Now, Avinash, how did you see the results? I think largely some disappointment on margins, on the guidance till 2031 as well. Any opinion here? Because it's one which a lot of investors actually hold on to, right? What would you recommend to someone who's already holding as well as to Sunny?
No, I think, see, these numbers were on expected lines, Puneet, and I think maybe the next quarter also will be challenging. But hopefully, if the geopolitical situation improves and I think things get back to normal, then I think L&T definitely should do business back to normal. And I think clearly in terms of the opportunity, L&T has got several pockets of opportunity like capital goods, infra, defense. So I would say that the investor should hold on. Keep some time invested here and have the conviction. The management has the potential to bounce back. And I think better numbers could come in post-September. So I think till that time, the stock may be a market performer, but longer term, we continue to be positive.
The next one is on Juniper Hotels. Our viewer Nagraj from Hyderabad is holding 40 shares, bought at the levels of 360. He says he's sitting on a loss of around 6,000 odd rupees. Wants to know if he can continue to hold from a long-term perspective or book losses. Avinash, any view on Juniper Hotels?
No, I think here my sense is if the investor has a couple of years in mind, then I think he should average and stay invested. It's a good business model. The promoters have the right bandwidth, but I think the investor has purchased the stock at a slightly elevated level. So unless the investor spends a considerable amount of time here, only then the risk reward would come in. So I think rather than booking a loss, increase the time frame, and I think average at the current level, you will definitely be rewarded over the longer term.
Well, speaking of rewards, Avinash, I'm hearing that it's your birthday today, so just wanted to wish you a very happy birthday. You've been a key supporter of NDTV Profit over the last few years that we've been on air, and of course to Ask Profit most certainly. So just wanted to wish you a happy birthday, and I think Mahima would say the same.
Yeah, I think Avinash, a very happy birthday to you and wishing you good health and happiness always. I think this is from the entire NDTV Profit family to you.
Yeah, thank you.
All right, okay. We've got our next caller. I think Jagan is calling us from Visakhapatnam. Jagan, a very good morning to you. What's your query about?
Good morning. I'm actually looking for Lemon Tree for the short sale, and I have 12,000 stocks of Lemon Tree.
Okay.
At 118.20.
Okay, interesting. All right, I'll take this up with Vaishali. Then Vaishali is already sitting on profits of 37,000 odd rupees because of the huge quantity that it's got. It's around 12,000 shares. From a short-term perspective, continue to hold, looking at the charts?
Well, first of all, happy birthday to Avinash from my side too. And talking about Lemon Tree, I would say keep a range of 115 to 130. That is the range for a short-term perspective.
Got that view. The next question coming in now, it's from Murli from Kerala. He's holding 150 shares of Zentech at almost 1,800, and results were weak yesterday. Reported stock was also down. Let's look at the 5-day chart to get the perspective to our viewers as well. Asking what's the future now, Avinash? Disappointing results, and your stock's taken a beating post that. And there were some concerns, right, of order book being built up only for just a couple of quarters as well. So limited visibility there. What's your view?
No, I think, see, Puneet, in companies like Zen Technologies, you can't take a quarter-on-quarter view. I think in the past also we have seen, some very bad quarters and then the company bouncing back. I feel that, in a company like Zen Technologies at this level, if you don't have at least a 18 to 24 month view, you will not be able to ride the entire value creation journey. So I think, the company continues to do well. The management is quite strong and its domain expertise is there. The defense opportunity is also very large. So I would say that, in the short term, the stock will struggle because these numbers are definitely not exciting. The markets were expecting better numbers. So I think take a longer term view. And I think if you want to have this share, then I think unless you have a perspective of 12 to 18 months, it's not possible for you to make money. So stay invested, but keep the long story, intact. I think short term, the stock will struggle.
Okay. The next one that we have is from a short term perspective. Sunita from Delhi is asking whether M&M or Lupin, which one has a better return potential for the next 3 odd months? She's looking at a 10% gains. Wants to know the stop loss and target price as well as the entry price for one of these which is looking better. Vaishali, your view on whether to buy Lupin or M&M for the next 3 months?
So I would say M&M would be a good buy at these levels because it's seen a good corrective move. And if you're looking at 2 to 3 months, then 3100 should be the support, and perhaps 3550 could be the next target. Lupin is in a positive territory, but we've seen already a good run up. So I would take M&M as a favorable risk reward stock.
Got that view, but the next question coming in now, Vaishali, again, just a short-term view that you have on Kotak Mahindra Bank as well. The results didn't enthuse the street too much, but what's your opinion on the stock now?
Well, nothing much has been happening, but purely on technical terms, 350 is the support. And if there is some momentum coming in, 385 would be the first target, 395 would be the next target.
The next one is on Good Luck India. Sachin says that he's seen a recent breakout on the charts for this one. What's the short-term outlook, the target price and stop loss? Vaishali, on the charts?
So, Good Luck, yes, as rightfully noticed, it has given a breakout about 1350 levels. Continue holding. Next target would be 1450 to 1480.
Hopefully for our viewer, Sachin got that view, Vaishali, and hopefully for our viewer, Sachin, this stock does bring some good luck to him as well. I'm just stealing your thunder at this point in time. But Murthy from Vizag actually has another question on Hyundai Motors right now, asking if it's a good time to enter. Avinash, results on 8th and Street's not expecting too much yet again, and it's very close to that IPO price as well. What's your preferred pick actually in the auto pack? Because we're seeing leadership now largely being defined, right? Clear winners there. What's your opinion on Hyundai?
No, I think numbers are unlikely to be, very strong. I think markets expecting a very strong volume growth number, but that has not come in. So I think, we'll like to wait for the management commentary as to what kind of product launches, what kind of, volume growth expectations the company has got. But I think within the auto space, Puneet, Mahindra and Mahindra, looks very strong. I think yesterday the numbers had come in 18,000 crore PAT. And I think very strong commentary. I think margins could be a little bit down, but I think overall the volume growth is expected to be very strong. So here around levels of 3450, 3475 very much look possible over the next, say, 6 to 12 months.
Okay, we've got Aruna who's calling us from Vijayawada. Aruna, a very good morning to you. I believe you have a question on Voltam.
Yes, ma'am. Very good morning to all of you, ma'am. Thanks for taking my query. So, yeah, what's the entry price for Old TAM, both short-term and long-term?
So, Aruna, while you were analyzing this counter, did you see the charts or did you see the fundamentals of the company?
Charts only I have seen, ma'am.
Okay, all right. Then I'll take this up with Vaishali. Vaishali, Voltam transformers, what are the charts indicating? Is this the right time to enter?
Well, the going was pretty good till yesterday's results, but I think near-term support is 9,500. So, if your time is not your problem, then I think continue holding 9,500, 9,300. These are the levels to add more, because once we see some stability and new round of momentum setting in, this can retest the previous high and perhaps go higher.
Got it. Well, the next question is an interesting one, from our viewer, and it's from Prashant. He wants to know on Polycab or on Sterlite Tech, Avinash, if either of those counters look good to enter at this point of time, both trading at all-time high, but ROC as well as the ROE is very strong is his question. Any preference here?
I think within the wire and cable space, Puneet, Polycab definitely is a much better choice. I think, of course, Sterlite Technologies is also expected to do well because demand for optic fibers has gone up. Considering the kind of investments which are coming in the data center opportunity. But I think Polycab, we have the conference call today at around 4 o'clock. My sense is the numbers and the outlook commentary going forward will be very critical. But Polycab, if somebody were to accumulate maybe in a small, a staggered manner, in the next, say, 12 to 18 months, I think the growth momentum will continue. So Polycab can be a better choice. Stay invested for the next 12 to 18 months.
The next one is on Bellrise Industries. Gary is asking whether this is the right time to enter the counter from a 6 months perspective. Vaishali, would you recommend that?
Well, actually, the stock is already risen very high, but having said that, it still doesn't show any exhaustion. So I would say keep a range of 205, and this can go towards 230 to 250 levels in times to come.
Got that view, Vaishali. The next question coming in now. This one's, on a smaller stock here, Jyoti Resins, and a viewer, Sundar, has bought it at 1,700. Now, stock's currently trading at 839. Just trying my luck here, Avinash, do you track this by any chance?
Puneet, if you could please tell me the name again.
Yeah, Jyoti Resins is the counter. Jyoti Resins and Adhesives, yeah.
See, this is a company which is a smaller comparison of Pidilite. They are into industrial adhesives. And I think the company has done remarkably well. So I think, going forward in the longer term, the market opportunity and the pool size is very large, which I think, Jyoti Resin has frankly, demonstrated its, growth potential very well. So I think taking the next 12 to 15 months, yes, I think it's a good bet to, bet in the adhesive space, because if you look at Pidilite and if you look at Jyoti Resins is a much smaller player, but profitability is quite attractive. And I think the opportunity is large. So here, definitely, if you have a medium-term view, you should stay invested.
Got that view, and thanks so much for that, Avinash. The next question, and viewers, it's now time for the rapid fire round, the second edition in this edition of Ask Profit. Let me go across, take the first query. Now, this one's from Ramya from Chennai, and wants to know between Oswal Pumps or Max Health. Very different counters, Avinash. There's different sectors too, but what's a better one-year pick from here on?
I think I would prefer Max Health. I think, that is a promising opportunity in the hospital space. That would be a better choice.
Okay, the next one is on MTAR Tech. Is this the right price to buy for the next 3 months, Vaishali?
Well, MTAR Tech already gone quite high. So I would say keep a stop loss of 6,000 and look for 6,600.
Got it. The next question coming in now, it's between Bajaj Housing, GMR Airports. What's a better pick for the long term, Avinash?
I think my guess is GMR Airports is a very unique opportunity. I think if you have the next, say, 12, 18 months in mind, this is a good price to accumulate.
Crompton Greaves, at the current rate, buying makes sense from a long-term perspective, Avinash?
Yeah, I think my sense is if you have a 12 to 18 month time frame, you can gradually accumulate.
Got it. Trent bought at almost 5,000 rupees by Harsha from Vijayawada. She's holding 50 shares. What's a view here, Vaishali?
You can average it out. It's corrected quite a bit. It is at a good support level. You can average it out.
Okay, Transray Lighting bought at the levels of 580. What's the one-year outlook for this one, Avinash?
I think outlook is pretty positive. The stock has been hammered from its high, but I think numbers have been pretty strong. So I think continue to hold.
KPIT Tech bought by Sunil at 728. Avinash's question being what he should do for the long term. Would you recommend him to exit since it's since he's in profits right now?
No, I think if he's got a short-term view, Puneet, he can exit. But otherwise, I think it operates in the automotive and basically in the US American market. So I think very strong clientele. So obviously, if he's got a short-term view, he should exit.
Okay, 268 shares of JK Tyre bought at the levels of 606. Hold or sell, Vaishali, on the charts?
Hold.
The next one coming in is on Union Bank, bought at 164. And the view, the question, Vaishali, is what's a good price to sell it?
I think quite correct. So I would say sell at around 170.
Okay, the next one is an interesting one. Ashish from Delhi is saying ITC Kab chalega. He's got 500 shares at the levels of 400. Avinash, your view from a long-term perspective?
I think here you need to give in a slightly longer period. I think ITC is a steady compounder.
Yes.
I think definitely at these levels there's nothing to lose. So I mean you have to possibly give say 12 to 18 months and continue to hold.
Continue to hold. Got well. Continue to eat bingo chips at least in that time, and probably the other product if you're interested. But Mahalakshmi from Hyderabad is holding on to ABB at 5580. Avinash, so she's a senior citizen holding 78 shares. Can she hold on for another year?
Yeah, I think she can hold on. I think growth momentum will come in. I think because this is a stock which is largely dependent on how the macroeconomy performs. So very strong MNC parent, continue to hold.
Okay, the next one is on Hindustan Zinc. Is this the right time to purchase from a short-term perspective, Vaishali?
Yes.
Uday is holding on to GPT Healthcare, which he bought at the IPO price. I can't remember the IPO price for this one, Avinash, but you have an opinion on the stock?
Yeah, I think it's a newly listed hospital company, and I think if you can hold on for the next say 12 to 15 months, I think has been done remarkably well. But I think it's a small hospital, so I think it will take some time to get related.
Okay. HAL 700 shares bought at the levels of 4659. Siva wants to know a medium-term view on this one. Avinash?
No, I think continue to hold. I think it should continue to grow rapidly over the next 2 years.
Final query for today. Srinivas from Hyderabad wants to buy into Force Motors. Avinash, do you have a view here? New model launch as well yesterday.
I think wait for the quarter 1 numbers. I think probably after that it's better to buy fresh.
Quarter 4 or quarter 1, Avinash?
Quarter 1, sorry.
Quarter 1.
Quarter 1 of FY27.
27. Okay, so you have to wait for a couple of quarters. Got it. Well, Avinash as well as Vaishali, thanks so much for joining in, helping us solve 54 queries. Avinash, hopefully you have a good evening as well, but thanks so much for joining in. Viewers, that's all the time on this edition of the show. KYC comes up next, but we'll also start taking all your stock related queries at 2 p.m. on Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
welcome to Know Your Company. I am Mahima Vachrajani and we are going to take up a very interesting company today that we're going to try to decode in this episode of Know Your Company. The company that I'm talking about is Aadhaar Housing Finance. Now, of course, it did come out with its Q4 numbers, but we're going to we're going to do a deep dive analysis of how this housing financer is doing. Basically, as a housing financer, mortgage-related loan products, what is its forte in terms of the loans. Basically, it is for residential property purchases and construction. A lot of its loan book is from the salaried segment as well. Home improvement and extension loans is also something that the company provides. Loan is also they also provide loans for commercial property construction and acquisition as well. So these are the different segments of the loans that they give. Focused on low-income housing segments, the ticket size largely is around that 10 to 11 lakhs. In terms of the loan book, 100% secured retail loan book is what they have. And this is of course the brief about the company. In terms of product mix, around 27% is LAP and around 73% of their loan book is retail home loan. So that is the big chunk of their entire loan book. In terms of how the geography and reach is, around 22 states is where the company has its presence, and it's got a vast expansion when it comes to branches. Around 626 branches is what the reach looks like overall. So this is the overall view of what the company does, how is the reach, how is the geography as well. Now in terms of the parameters that we're going to talk about when it comes to Aadhaar Housing Finance and as to how we're going to rate the company, let's take a look at those 8 parameters. The first one is going to be the income statement that we're going to talk about. We're going to talk about the balance sheet. We're also going to talk about the operational metrics here as to how yields are, how ROAs are faring for the company. We're also going to talk about how asset quality is looking like, what is the guidance looking like going forward. Shareholding, this is a very strong company backed by Blackstone. Street cred, how has the performance of the stock been in the last 1 year? How has it been performing in the last couple of months? We're also going to talk about valuations as compared to peers. How is this company doing? Whether a slightly higher valuation is justified or not is something that we're going to talk about. And the last metric is the guidance given by the management. They're maintaining a strong guidance going forward in FY27, and we're going to quiz the management as well with regards to how this guidance fared. But let's start with the income statement first. Let's try to pull those metrics up. In terms of the net interest income, the 3-year CAGR has been at that 23% mark. This shows that there is solid loan growth, plus the spreads also looking very nice. In terms of the credit costs as well, the credit costs are relatively controlled, slightly inching up, but overall we've seen credit costs being in a stable range. In terms of net profit, the growth has been at a 25% CAGR, which is a very strong bottom line with good operational leverage is what we've seen. In terms of the quarter-on-quarter basis, net interest income, we've seen an uptick of 9%, and YOY basis we've seen an uptick of 25%. This means that there's steady loan expansion happening, plus there is stable margins as well. In terms of operating profits, up 4% QOQ basis and up 27% YOY basis. This basically means that operating leverage is kicking in. Slight moderation is happening QOQ, but we'll try to understand as to why that's happened. Credit costs overall have gone down on QOQ basis, but are up year-on-year basis. That means there is net improvement overall, and net profit has seen a growth of around 11% QOQ basis, and YOY basis seen a growth of around 27%. So strong earnings momentum has sustained. So overall, if you take a look at the income statement, it's certainly a thumbs up considering the way things are moving. The next one is balance sheet. Let's take a look at the metrics here. The AUM 3-year CAGR has seen a growth of 21%. Overall, strong and consistent expansion has been happening when it comes to this particular counter. Disbursements, if you take a look at that number, the 3-year CAGR has been 17%. Growth is steady, slightly lower than AUM, but still a steady one. For borrowings, Total funds, the CAGR, overall in the past 3 years has been around 16%. Funding growth overall is healthy and slightly, more conservative as compared to AUM. But AUM being more than disbursements growth, loan book is growing faster than the fresh loans, and overall indicating lower prepayments as well. And overall, this is how typically it is in a housing finance company as well. In terms of AUM growing faster than borrowings, I think that suggests that there is improving capital efficiency and the disbursement is also, slightly lagging, and that means that there is slight moderation in terms of new demand. That is something that we'll ask the management as well in terms of how demand is looking like in terms of where disbursements are standing. So that's with regards to, of course, the two metrics that we talked about. But the next one that we're going to talk about is operational metrics as to how yields, ROAs, etc. are looking like. Now, yields, if we take a look at the past couple of quarters, the yields have slightly declined. This suggests that there might be slight or mild pricing pressure. Shift to maybe safer or lower yields is what the management is probably aiming at. We'll ask the management as to why that has happened. In terms of ROA, there is a very strong profitability, for a company like Aadhaar Housing. It's gone from 4.3 to 4.8 just in the past 2 odd quarters. So a very strong profitability when it comes to the ROA. In terms of cost of borrowing, it's gone from 7.9 to 7.7, which has come down. So that is also on a positive side. And spreads are also overall stable. Around 5.8% is what we've seen. As compared to where they were at 5.9% in Q2. But overall cost to income, this is a very interesting one, because if you take a look at how the cost to income has come down in the past couple of years, 38% in FY23 to a 36% in FY26 we have seen. Most certainly a positive one. This indicates that there is improving in efficiency and operating leverage is kicking in when it comes to the cost to income ratio. So overall, in terms of where operational metrics go, it's certainly a very good set of numbers that we are seeing. Now, let's take a look at the asset quality as well. In terms of the GNPA to AUM as a percentage, there has not been much movement here. Overall, the asset quality is largely controlled is what we've seen. FY23 it stood at around 1.16, which is come down slightly to around 1.08 in FY26. For the NNPA, let's try to pull that chart up to AUM, because that is an interesting one. Here also, overall, there is adequate provisioning. Slight uptick is what we've seen in FY26. But overall, this is also not very concerning when it comes to, there is no structural concern when it comes to this metrics as well. So this is with regards to where asset quality goes. Now, in terms of the next metric that we're going to talk about is shareholding. Let's take a look at how the shareholding pattern of this company looks like. Everybody knows that this is a Blackstone-backed company. In terms of where the shareholding goes, when it got listed, the promoters were holding around 76% which has come down to around 65%. So slight selling has been there, but still a very well-held company. But we'll try to quiz the management around understanding around this backing of Blackstone, how long, long-term view with that stands. FIs have slightly increased their stake in the past 2 years since the listing from a 4% to around 6% DIs have also slightly increased the stake from an 8% to 8.5% to around 9.15%, and the public shareholding has gone up from around 11% to almost 20%. So it's a well-held company fairly, and there's strong promoter backing as well. Now let's take a look at street cred as well. Now, in the past 1 year, we've seen, of course, markets consolidating, markets being under pressure as well. 1 month has been very good for the counter. It's given a return of around 12% considered to where the markets have been in the past 1 month. 3 months also, it's been in the positive, given around 8% return. But in a year, it's just up around 9.5%. So just taking conservative approach here, we've given it a thumbs down, considering that the way it has been growing, the stock has not been that rewarding. But in terms of where valuations go, Aadhaar Housing 1 year forward price to book as per Bloomberg stands at around 2.48 times. That compared to Aptus value stands around 2.2 times, and that as compared to PNB Housing stands at around 1.3 odd times. But what analysts are suggesting is that the way Aadhaar Housing has been growing, the way the loan book is, the way the AUM growth has been like, the slightly higher valuation as compared to both of its peers is justified. And that is why we've taken a neutral approach here, though valuation is slightly higher as compared to peers. But the way it has been growing, this kind of valuation is justified, and that's why we've given it a neutral rating. In terms of, just before I go on to guidance, street coverage, 16 out of 7 analysts have given buy rating on this one. And if I'm not wrong, overall, the expectations as per Bloomberg as to upside return potential for the next year for this counter is around 22%. Moving on to the guidance part, as to what is the guidance that the management has given when it comes to FY27. What they've said is that AUM growth is going to be at 20%. I'm sure that this is a conservative one. We'll try to quiz the management on this one as well, because 3-year CAGR for AUM growth has been 21%, more than what they've guided for. PAT growth as well at 20%, so very constructive when it comes to the PAT growth as well. Disbursement growth is going to be around 17 to 18%. So that's the overall guidance that the management has given for Aadhaar Housing Finance. So that's everything, all the 8 metrics that we talked about Aadhaar Housing Finance. Now let's take a look at the rating as well. Income statement, most certainly a thumbs up. Everything looks very positive. Balance sheet also, very strong balance sheet, but just taking a conservative approach here and giving it a neutral rating. Operational metrics, most certainly a thumbs up with yields, ROA, everything improving. Asset quality, we've given a slightly neutral rating to this one, considering that it's not moved much in the past couple of years. Shareholding, we've given it a neutral rating just to just from the approach of trying to quiz the management with regards to how Blackstone is looking at this holding from a long-term perspective. Street cred is a thumbs down, because in the last 1 year it's not a very attractive return as compared to the way the company has grown. Valuations, again, is a neutral rating here, because slightly expensive to its peers, but at the same time it's justified, like I said, because of the way the company has been growing very well. Lastly, FY27 guidance, most certainly a thumbs up, considering that they've given 20% growth guidance in AUM as well as 20% growth guidance in PAT. So the final rating for Aadhaar Housing comes out to be 5 out of 8, which is a very good rating. After a very, very, very short break, we're going to speak to Rishi Anand, the Managing Director and CEO of Aadhaar Housing. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching KYC, and as promised, on this side of the show, we are joined by Rishi Anand, who is the Managing Director and CEO of Aadhaar Housing Finance, joining us. Rishi, thank you so much, first of all, for taking out the time. My first question to you is, with regards to the guidance that you've given, AUM growth at 20%, PAT growth at 20%, 3-year CAGR, if you look at your AUM growth, it's been more than that 20% mark, right? Just want to understand that this guidance is given on taking a conservative approach. Do you think you can do better than that 20% in terms of where FY27 goes?
Great. Very good morning, Mahima. A tricky question to start with. Yes, we have given a clear guidance of 20% growth on AUM, 20% growth on VAT, keep the GNPA below 1.1. These are pure guidance numbers. And, end of the day, we always give range bound. So when I said 20%, I always meant 20 to 22%, both in terms of profits as well as on AUM. And on best effort basis, why not? Our CAGR, and you're right, our CAGR has been 21%, and on effort basis, it should be above 20% as we go ahead.
Okay. The other aspect, Rishi, is with regards to how AUM has been compounding faster than your disbursements, right? Just want to get a sense. This is on account of lower prepayments is what we're seeing. What are the trends looking like when it comes to repayments? And going forward in FY27, what are you expecting?
Yes, you've picked up the right point. It is on account of lower prepayments and foreclosures. If I look at the foreclosures that was in FY23, it was in the range bound of 18-19%. Now we're talking about 17%. So lower the prepayments, higher the AUM growth will be. But from a disbursement, purely from an incremental disbursement perspective, anywhere between 18 to 20% is what we are looking at, which will compound or throw a AUM growth of about 21 to 22%.
Got it. Correct me if I'm wrong here, Rishi. You have given a target of around 50,000 crores of AUM in the next 3 years. Help us understand as to what are going to be the key drivers going forward. Is it going to be geographic expansion, ticket size increase? I mean, how are you just trying to look at that growth coming in?
So, Mahima, it is going to be, and you're right on the 50,000 crore number. Even if I talk about a 20% AUM growth for the next 3 years, that's the simple maths that we reach about 50,000 crores. There are going to be multiple things that is going to fuel this 50,000 crores, right? From, yes, expansion, keep adding 30 to 40 branches year on year. We are today 626 branches, 22 states, 550 districts being covered. Keep adding 30 more branches in tier 2 and below, which is our emerging concept. That fuels it. Second is, more importantly, you'll have to look at what is happening on the demand side. All the state governments, the central government, the PMAY scheme, the BLC scheme, the affordable housing projects. There is too much happening right now as we speak in the EWS-LIG segment. That's what we cater to. To top it up, I think it is, and we've invested a lot in the last 2 years on technology, on implementing, on getting the right AI inputs into our processes. So all that is going to fuel our efficiencies and better productivities. So I would say a combination of all three is going to fuel this 50,000 crores.
Understood. With regards to your yields, slightly they're trending lower, and this I understand this on account of PLR cuts as well as the the mix in terms of changes in the mix. Just want to understand as to how confident are you going forward with regards to your spreads? Will they be maintained at that 5.8% mark?
So what we have maintained, Mahima, always is that we will always be a company upward of 5.5. Today we are trending at about 5.8. In the short term, I don't see any reason why this 5.8 should not be maintained. And you're right, 15 bips cut we did in February, that has impacted, and that's been across the book. So that has given a little impact. But a 5.8 is completely sustainable in the short to medium term. 70-30 breakup of home loan to non-home loan is what we're going to be maintaining. We are going to be increasing 1% self-employed. Today, self-employed is about 45% on my book. We are going to be increasing that by a percentage each year. That is by design. And that's going to help us balance out the spreads that we maintain.
In terms of ROA, it's trading at around 4.8%, which is one of the best in class. Just want to get a sense as to how sustainable is this ratio? Because I want to understand as to how much of this is structural and cyclical.
So 4.8, the number that you've been quoting is for the quarter. But if I look at the financial year complete, it is 0.3. And even on a 4.3, we happen to be one of the best in the peer group in the industry that is being delivered. And I don't see any reason why a company which has reached a 4.3, there should be any reasons why it should be dropping further. So we are very confident of maintaining the ROAs that have been delivered.
Cost to income has been improving steadily. If we take a look at how the comparison has been from FY23 to FY26, I want to understand as to how much of an operating leverage is still left, considering that there is going to be branch expansions going forward. How are you looking at that trend?
So our vision has been very clear, Mahima, that 40 to 50 bips year-on-year basis, we should look at reducing the cost to income purely by building in efficiencies. We speak about branch network, but the kind of branches we open are low OPEX branches, the low CAPEX and OPEX branches, which does not impact, and they typically break even in about 9 months. So that does not impact the cost to income at the percentages we talk about, and clearly indicating 40 to 50 bips reduction in the cost to income as we go ahead. And you're right, if I remember right, in the last 3 years we would have dropped our cost to income by about 300 bips.
Got it. Your gross NPA and net NPA, largely have been stable, and that's not a concern as well for a company like you. But I wanted to understand that credit costs have seen some volatility. So going forward, how are you looking at that trend?
No, we've been very clear on credit, the credit cost, asset quality. You indicated GNPA and NPA. There are no issues at all. We guided the market for a 1.1%. We've closed at about 1.08% GNPA, so well within range bound. Credit cost, we've always maintained that we will be a company not beyond 25 bips of credit cost, and we would. There is a lot of confidence around maintaining that level.
Understood. Rishi, you're one of those companies which is backed by, which has a very strong backing of Blackstone. Although the percentage of holding has come down to around 64%, just want to, help. Just want to understand in terms of, going forward from a long-term relationship view, how are you viewing, that percentage not going down?
So, Mahima, this is a question best asked to Blackstone. Having said that, indicatively, you see, they came in 2019 June, if I'm right, on the month, and the rollover of the fund has just happened in February this year. Rollover obviously brings in a lot of comfort and trust on the management. It brings in a lot of stability across the way the models of private equity model work, and we as management, obviously, from a Blackstone perspective, there are no indications at all of looking at early exits, etc. So, as I said, this question better be asked to them. But as management, it gives a lot of comfort with a player like a private equity like Blackstone backing us. And yes, you're right. The 75% on the rollover came down to about 65%. 10% moved on to a sovereign fund based out of Abu Dhabi. So, but broadly, the shareholding pattern remains in the comfort zone.
Understood. Given that expectation is that the rate cycle is going to remain stable for at least next 2 to 3 odd quarters, just want to get a sense as to how sensitive in terms of, are you in terms of margins? If if there is a surprise on the upside going forward, how are you looking at that metric?
The clear view at Aadhaar is that, we have seen the peak, not the peak, the downward trend. From here on, it should be steady state given the disturbances across Middle East. But if you look at the composition of the book, Mahima, we are a 75% floating book on the asset side, and we are a 74% floating book on the liability side. So whatever comes in eventually gets passed on. And this composition of 75% and 75% helps us protect our margins and spreads. So there is no serious reason why my spreads should be under threat. Yeah, there can be always a lag of a quarter here and there, which is operational reasons, but broadly it is protected.
You've highlighted that tier 2, tier 3 markets are still very strong for you, considering, everything that's happening geopolitically with regards to West Asia conflicts. Are you seeing, any pressure in terms of, where demand goes? Because, overall, it is putting pressure in terms of when it comes to the Aam Aadmi money that comes in their hand, and inflation is certainly putting pressure on them. So are you seeing any pressure in the near term because of this aspect?
I think you chose the right word, Mahima, Aam Aadmi. That's what we do. We cater to EWS LIG. This is the actual Aam Aadmi in the society. Aam Aadmi deals more in essential commodities. He's the guy who is lowest in the state of the society. It does not matter to him what is happening in West Asia, because he's not an NRI, and NRI flows are not coming to him. Having said that, our first line of defense has always been bouncing, etc. So we keep a close tab on what is happening on account of the West Asia issue. is there going to be a issue around demand? See, my customer is a consumer who is doing a construction of a 2-room in a remote tier 2, tier 3 city. He is buying a small, 10 lakh kind of properties. That's the consumer I'm dealing with. We even post-COVID, we all said that markets are going to go down for the next couple of years, but this segment always prove everybody wrong. So I don't see any reasons why, especially because of the consumer that I cater to, I don't see any disturbances in that trend. Plus, to top it up with the government initiatives of PMAY, it is helping us a lot on the ground.
Right, Rishi, thank you so much for taking out the time and helping us answer all those questions that you did so candidly. Thank you so much for that. All right, viewers, so that was, of course, the management of Aadhaar Housing Finance. But with that, we're completely out of time on this edition of Know Your Company. But do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On
Cautious trade continues on the Lal Street as Nifty trades near 24,100 levels. Broader markets outperformed today. Major sectors trade in the green, barring the FMCG and energy sectors. Coforge delivered a standout Q4 number. Profit sharply beats the street expectations on strong execution and margin expansion. Brokerages turned more constructive, citing improved growth visibility, better margins and healthy deal pipeline heading into the new fiscal. Larsen & Toubro is in focus after missing revenue and EBITDA estimates. with margins slightly below the expectations. Profit growth stayed modest, but management struck a confident tone, guiding for steady growth through FY31, despite near-term pressures. Cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore rupees of guaranteed credit to ease liquidity stress for MSMEs and mid-sized firms, and with zero guarantee fees and quick access. This stands to benefit the export-oriented MSMEs, restaurants and other businesses navigating the global disruptions. Oil extends decline as hopes of a US-Iran deal lifts the sentiment, pushing Brent towards $108 per barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take a look at the market. And yes, there has been a slight dip in the market at the current moment. Market has been really toying with the external pressures and the global sentiments coming in. Crude has cooled off a little, but remember, it is still way above the $100 per barrel mark, which is the concern for the Indian economy as well. Sensex almost flat to green in trade at the current moment. When we talk about the internals, well, Bharti Airtel, Mahindra and Mahindra, after strong set of numbers and good commentary coming in from the company, and also HDFC Bank, ICICI Bank and SBI, the three big boys of the banking sector, are all pushing and contributing the Nifty 50 the most. When we talk about the downside, Larsen & Toubro, RIL, from the FMCG consumption pack, HUL and ONGC Titan, these are the ones which are really the laggards in trade today. Remember, FMCG is a space which is of concern today. It is the biggest dragger. But when we talk about the sectors which are really playing a good role in the market is pharma as well as banking, some part of the banking space. When we talk about the other internals as well, the broader markets look far better than what the key indices are really showing today, over 1% up on the mid-cap universe. So that's the picture we should really keep in mind today. Sudeep Bandyopadhyay, who is the group chairman at IndiTrade Capital, joins in with a take on the market. Sudeep, always a pleasure to welcome you on NDTV Profit. How does one really play the market with the sentiment downers really coming in on a regular basis, and there is a day of gain and a day of losses? So there is a sustained volatility when we see in the overall momentum. Would you agree?
I completely agree with you, Nisha, and thank you for inviting me. I think we have to live with the volatility, and this volatility is not going to go away in a hurry. While there are positive statements which were made yesterday, and that's the reason why market is taking positive cues. But the fact remains that oil is still above $100 per barrel. The settlement in Gulf, West Asia, hasn't yet been reached. So things are still pretty tense and uncertain. Even yesterday, there were a lot of unfortunate incidents of firing by Iran on UAE. And things are not really looking to have been settled yet. So under the circumstances, I think investors will have to be prepared for volatility and act and handle markets accordingly. From a long-term investor's point of view, of course, there are interesting opportunities which are emerging, and it may be worthwhile to start accumulating good quality stocks in small doses over a period of time.
Right, so smaller stocks, and from the mid-cap universe, which is doing far better than the frontline indices today, Sudeep, what are the pockets which are really looking good, and is there still value to be made in the short term at this particular valuation levels in the mid-cap universe?
Well, I'm not sure about short term, because short term, as I was mentioning, there is too much of volatility, and it's extremely difficult to predict the market in the short term. I mean, if you are looking at technical trading, then it's different. But from a fundamental point of view, short term is extremely difficult to predict. But yes, mid-cap stocks opportunities still do exist. And there are pockets, whether it's pharma, whether it's auto ancillary, whether it's cement. I think there are opportunities of picking up good quality stocks. Valuation isn't cheap in any of these spaces, but if you're building a portfolio for long term, I think these are the areas you should look at.
That's right. So Sudeep, one thing, one observation from a lot of consumption companies, results in the last couple of days, like in the case of M&M, even in the case of Marico, across the board consumption space that is seen is that the revenue growth is good, profit is good, EBITDA is good, but EBITDA margin has taken a dip because of the cost pressure coming in. How do you assess the overall, price pressure, crude-linked, intermediaries, pressure and inflation really playing out in this particular earnings season?
Well, I think Q4 numbers which these companies are coming up with are definitely very, very good. And they are beating market expectation in most of the cases. You talked about Marico. You can talk about HUL. You can talk about Nestle. You can talk about many other companies. I think they are and will beat the market estimates. But I'm a little cautious for the future. As you alluded to, the costs because of the situation in Gulf is going up. Not only oil, which has its primary, secondary, and tertiary impact on multiple, commodities which are in the supply chain. There are supply chain blockages which are affecting these FMCG and consumer durable companies. Also, some of the chemicals are getting impacted, and that in turn is leading to supply chain bottlenecks and price challenges, cost-related challenges for these FMCG companies. I think this will get accentuated in Q1 and Q2, and I'll be cautious. Also remember that the predictions of the meteorological department, whether it's IMD or Skymet, is that monsoon will be subpar because of El Nino factor. Now, again, that doesn't augur well for the demand scenario as far as FMCG is concerned. So I will be a little cautious. I think Q4 is undoubtedly very good numbers, but Q1 and Q2, I think I'll wait and watch.
Right, Sudeep, very well pointed out that Q1 and Q2 will be difficult, and also with the monsoon impact. But Sudeep, one quick question to you. How much of the bad news of Q1 and Q2 is already baked into the market, and how much downward slide do you anticipate then on account of that from here on?
Well, I would say, if I have to put a percentage, I would say 20-30% of the bad news is baked in. Because somehow the market is factoring in a quick resolution to the West Asia problem. If that does happen, I think it's well and good. But if that doesn't happen, I think things can get far worse before they start recovering. So I would say market is expecting a quick resolution. And that's the reason why 20-30% of the bad news is baked in, but nothing beyond that. So we have to be a bit cautious. And as I told you, the El Nino impact on monsoon is going to have an impact on Indian capital market and Indian economy. We need to keep that in mind as well.
FMCG companies like Marico have already been raising that particular impact to really get baked in later. But only 20-30% of the bad news getting baked in is not a good news. Time for caution, says Sudeep. Thank you so much, Sudeep Bandyopadhyay, for joining in with your expert take. All right, let's take it straight to also the stocks which need to be on our radar. Shivam joins in with the entire list. Shivam, what all made to your watch list today?
Well, yes, the first stock is the United Breweries Limited, which is down over 3%. Now, the company has reported its Q4 earnings, and the revenue has been down around 3.1% to stand at 2,250 crores. The volumes of the company has seen a better growth than the street expectations, but there were few other metrics which has, such as the cost pressure, which has impacted the growth. The EBITDA margin has also contracted on the back of the high fixed cost. The company is also expecting to see the cost impact of around 400 to 500 crores in upcoming 2 to 3 quarters. Now, next stock is the SRF, which is up over 7% in today's session. The company has witnessed a strong growth in fluorochemicals, technical, textiles and films segments. The EBITDA jump has also been around very significant, around 47%, and technical textiles fluorochemicals has been contributing around 63% of the growth. The fluorochemicals business has seen a robust growth, which was on the back of higher volumes and better prices, and the company is looking forward to expand its hydrofluorocarbon capacity going further. Now, next stock is Coforge, which is up around 9% in today's trade, and the company has reported a strong set of Q4 numbers, where the margins have expanded by 250 basis points on the back of lower operating expenses, and the deal wins of the company stands at 9.2% which is up 9.2% to stand at $648 million.
A very good list and a detailed work on that. Thank you so much for putting that out for us. Now moving on, the new government in Bengal is likely to be a big positive move for the industries and MSMEs doing the business primarily around Bengal, says Sanjay Budia, who while speaking to NDTV Profit added to this. He even emphasized that this is one of the best periods for Bengal. Let's listen in.
Very important change which has happened in Bengal sentiment. I've been talking to a lot of businessmen and conglomerates folks also. They seem very bullish. Your initial views on how this is being perceived for Bengal?
I think it is seen as one of the best periods for Bengal. As they say, Bengal beckons. So it is now the time for people who have been settled abroad or who have been settled elsewhere, whether it is Bangalore or Hyderabad. They had that kind of feeling that, there could be job opportunities more in other states, and there could be, as they say, always grass is greener. So now they will also feel that, okay, there is the time to come back and, see the future and because there is, we have to agree on two things. A, Bengal, because of its unique geographical location, offers tremendous opportunities. It is the gateway to entire Northeast and to neighboring countries. So 7 sisters plus the Jharkhand, Bihar, Odisha, and then all the countries like Bhutan, Myanmar, Nepal, Bangladesh, whatnot. So it's a big area, and Bengal being the center of that hub, basically. So there is a huge number one. Number two, there are resources, mineral resources, where Bengal has huge age and advantage. So taking care of these two advantages, definitely we should now cash in to have some large manufacturing units which will spur growth, investment and employment. Bengal has been, mostly we have seen small and medium industries doing much more than larger industries. So it's the time now that we should also get some larger industries. So it will have a multiplier effect. As far as we are concerned, let me also give you our example.
Sure.
Basically,
Just wanted to understand a little bit. What are the industry demands looking like, sir? Now, presently, what would you be asking, as an industry in which you are working or the Bengal's businessmen are working? What kind of bottlenecks should be addressed first?
I would not say bottlenecks. We can say some of the few challenges or some of the actions, like you say, short hanging fruits, or what is medium term, what is long term. So some of the things which should be taken on priority basis is some of the incentives. You have to be at par. Basically, ultimately, all states need to offer. Now there is a competition not between countries but within the states also, which is very positive.
All right, so that was all the verdict really coming in from the state of Bengal there. But let's shift our focus back on the earnings momentum. Marico is the FMCG player that we are really talking about. Take a look at the numbers. Of course, the stock is really rewarding today, 2.5% up. And why not? The good set of numbers, strong growth momentum. All right, Saugata Gupta, MD and CEO of Marico, joins in for more on the numbers. Saugata, a good set of numbers, revenue growth, net profit growth, EBITDA growth, but EBITDA margin on a YOY basis has really taken a dip. What's really eating into the margins of the company?
Last year, as you know, there was a 100% increase in copra, which was 50% of our overall input cost in the basket. So I think that we have already seeing a fall in the copra prices, which is they are around 30-32% from the peak. And while I agree that there is a crude-linked inflation, when you have a 30-32% reduction in 50% of your commodity basket, the crude basket is around 20%. So we are net better off. So there is no risk to that. And number two is to take care of the the crude link basket, we have already taken a 78% kind of a price increases in that part of the portfolio. So I think we are extremely comfortable with respect to margins at this point of time is concerned.
All right, comfortable as of now, but Saugata, the war really continues, crude pressure will continue. What is the guidance for this particular quarter, and will the price hike really offset for that inflation?
It's very difficult to get into a quarterly basis. I think what we have given is a yearly outlook, which bakes in the fact that there would be a heightened crude for the balance year. Obviously, if there is a resolution to the current situation, crude will go down a bit, but it's not going to go back down to 2026 levels. And therefore, the supply assurance issues and all this has been baked in. With that, we are extremely confident of we should be able to deliver a double-digit revenue as well as a high teens EBITDA growth. And the reason, as I said, comes back to the fact that we believe that the copra is now range bound at 30 to 32% of our, below the last year's peak. We have taken a 10% price drop in Parachute in the non-price point packs, and given that that's the kind of a outlook, I think with that mix, even if there is a heightened crude, and we are obviously monitoring the effect of El Nino in the second half of the year, we are at this point in time reasonably confident. But in today's world, obviously, there could be multiple black swans, which you can't predict.
Right. So El Nino effect also will play out in the second half of this financial year or this calendar year. But what about more price hikes? Do you think that you will need that? And will the market absorb it without impacting the demand?
I think we have taken some price hikes in the crude link portfolio around 7 to 8%. And we believe this is good enough at this point in time. We'll wait and watch.
Saugata, your stock has been upgraded by the brokerages because of the strong momentum for FY27 outlook that you have given. What are going to be the key drivers for this strong outlook to play out?
I think we have been able to consistently execute multiple vectors of growth where we have a reasonably profitable core, which has shown significant resilience. Nowhere in the world a brand has taken 60% price hikes and delivered flat volume growth. Actually, it's a slightly positive net of MLH like Parachute has been able to do. I think our entire strategy on value-added hair oils is now playing out, which is investing behind the mid and the premium part of the portfolio, investing behind brand building equity as opposed to fighting it out with trade spends in the market, which is suicidal. Thirdly, I think the diversification play, which is now not only growth but profitable. We have amongst a lot of other peer set companies, one of the more consistent and profitable international play, which is again multiple vectors where we are significantly reducing our concentration risk of Bangladesh while I premiumize. So therefore, there are multiple vectors of play. Some years, some might not deliver. Some years, some might deliver. But, my point is that the majority today are on a momentum. And I think one of the things that is unique to us is we have a management which is there for the long term with a long-term view and consistent execution. For us, the founder's mentality, ownership mindset in the leadership, which leads to high degree of consistent execution and also ability to cope with adversity. And I think it is a very battle-hardy team in terms of coming from whether it's COVID, Ukraine, we had last year significant cost push, and this year. So I think that helps. And I think today, I would say significant amount of the vectors are firing consistently.
All right. So looking confident there, Saugata. But my question also, how is demand picture really panning out with inflation, war impact playing out? And also with that urban demand pickup, are you seeing that and also volume growth?
Last year, I think pre the GST rationalization, we had already seen rural picking up. I think overall, a significant benign inflation and along with the GST rate rationalization, which also encouraged a lot of unbranded to branded as small players to large players because the consumers are aspirational. I think that helped the urban growth. We believe that so far, compared to a lot of emerging markets, our consumers have been shielded from inflation. I think the government has done a fantastic job in protecting that, insulating the consumers. And obviously there is a watch out as far as inflation is concerned, or what can happen with the El Nino effect to the second half of the year. So far, I think demand is in control. And the other larger thing which will help, I believe, the organized players is during a little bit of crisis which we are facing in terms of supply chain assurance, which needs working capital, which needs a far more agility and deep pockets. So larger players' ability to cope with this is far better than the smaller players, and therefore in today's situation, the larger players in this sector are likely to consolidate and volumes in favor of the smaller players. So given that, if I look at the larger players in the sector, the listed set in the sector, I think this year will continue to be decently good.
All right, this year continues to be decently good. But as a sector leader also, Saugata, how are you seeing this West Asia conflict really impacting the overall sector and also your company? If you can give an outlook for this year.
Break it up into two parts. I think a resolution which is perhaps on the cards, and then obviously there will be some softening of crude-led thing. We believe that it will obviously be at a higher level. So we have to manage with and bake in a higher level of crude prices and crude derivatives for the rest of the year. Having said that, I think it depends on the company's mix. It depends on the company's portfolio in terms of how much, a lot of Indian companies we are present in Middle East. In Middle East, to be honest, other than the supply chain constraints, we haven't seen a significant demand, rationalization or something like that. For us, for example, Middle East contributes to 4% of others, but we are not seeing any major concerns. So we are hopeful. I think it's good to be optimistic sometimes that there will be a resolution sometime soon, and things will, while it will not go back to the normal of 2026, it will soften definitely for the current this one. But yes, this year will be a little tricky for a lot of people, especially those who have significant amount of crude-led basket in the input costs.
All right. Thank you so much, Saugata Gupta of Marico, really giving the full perspective how this year is going to pan out for the company and the sector. Thank you so much. All the best for the next quarter. And there you go, over 2% gain when it comes to Marico after a strong set of numbers, slightly pared down from when we started the discussion. All right, a new risk is really haunting the Indian banks, not myth, but mythos. Well, Kotak's CEO says that AI-driven cyber threats now strike at machine speed, not human pace. Banks are really racing to upgrade the systems. Piyush, my colleague, is here with all the details on this. Piyush, tell us.
That's absolutely correct. In fact, Kotak Bank CEO Mr. Vaswani said that AI risks keep him awake at night, and now bankers have to respond to AI-based threats on a real-time basis and act like machines to actually counter these AI models. We are aware that Anthropic-built Mythos can spot vulnerabilities in a bank's IT system or any operating software in real-time basis. Banks have actually stepped up their investments as well on cyber front. HDFC Bank CEO said that the bank's spending has quadrupled in terms of tech spending to over $1 billion in FY26. PNB has earmarked around 3,500 crore for digital cybersecurity infrastructure, and ICICI Bank says it spent around 11% of its OPEX just on digital infra in the last financial year.
All right, Piyush. So that's one very important development to watch out for when it comes to the banking sector. A quick update on Vodafone Idea. The stock is gaining today because of the changes in the board and non-executive chairman position. That has been regained by Kumar Mangalam Birla. Remember, in the year 2021, he had stepped down when AGR dues were really haunting the company. And now with AGR dues issue and waiver really coming in with clarity, company really looking at the future prospects of growth now. And also remember, the government's indication is that we need 3 healthy telecom operators, and therefore a lot of waiver and bailing out has been done behind Vodafone Idea. After all that is over, now the company is looking at the growth prospects going forward. Lenders are being connected for raising funds for the growth potential as well. So therefore, Kumar Mangalam Birla steps up as the non-executive chairman once again for confidence-boosting measure for all the stakeholders post the AGR waiver. Also, it does a few other things. KM Birla as non-executive chairman to give comfort to the lenders at the fundraise event, and also important signal and very important to dispel the rumors on sale of the company to any other promoter group. So those are the indications and messaging with this top appointment. So keep an eye out on Vodafone Idea. With that, completely out of time on markets at 12, but do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. Just
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Puneet Joheri, who's standing at the NDTV Profit market bid. With all the action in the market today, Puneet, It's an interesting day of trade because that tug of war somewhere continues as well, because last 7 to 8 trading sessions we have been in a pretty broad range, specifically when it goes to Nifty 50, and it's broader markets which is seeing buying at lower levels. So that's where probably value is emerging.
Well, most certainly, and we're seeing the consolidatory phase continue for the Nifty 50 today as well. We're off from the day's high, and we've been speaking about 24,300 being a zone where the markets have seen pullback time and time again. Today, from that 24,250 itself that has happened today. So when you look at the key factors that we're looking at for the markets today, that has been one of the key factors. So 24,000 continues to be a key level where we come back to it and are seeing consolidation even on most of those days as well. 200 points off from the day's high, but the mid and small cap index continue to power through at this point of time. Mid cap index now at the day's high at almost 1.4%, small cap also at 1.2%, but within the indices you've seen pharma as well as healthcare continue to be the big gainers for today. And Coforge, in terms of individual stock movers, now up 10% after a blockbuster set of numbers. But the fears of a larger Anthropic entering into the IT service domain and also seeing cognizant that 15,000 layoff number is definitely catching the street, at least a bit of cold in that sense for the IT majors. So you're seeing TCS, HCL Tech, Infosys all down. It's only Persistent and Coforge that's driving the market today. And in terms of the other individual movers, you're seeing SRF and Hero MotoCorp report good set of results. And L&T is continuing to disappointing the street today, down 3% and is the biggest Nifty loser. But that is what's happening in the markets today. But Hero, back to you.
Okay, so that's with regards to where markets go, but let's quickly look at the watch list. Indigo is in focus, and this is on the back of the ECLGS 5.0 for airlines that benefits the company. M&M brokerages have been absolutely upbeat. Bajaj Auto will be in focus on the back of earnings and the buyback announcement that could be coming in. L&T, brokerages have been flagging concerns, and that's the reason why you're seeing pressure there. Embassy Development, that's moved out of IBC classification, and that's the reason why you're seeing a strong surge coming in. Elecon Engineering is buzzing on the back of volumes, and you have Coforge and Signity Tech both that are in focus, one on the back of numbers and two on the back of the merger completion. United Spirits, the premium segment has been driving growth for the company, and you have a UBL on the other side, which has actually fallen short of estimates. That stock is at a 52-week low. Wockhardt also in focus. The stock is up 19% in the last 4 trading sessions, and this is on the strong performance in terms of FY26, a profit number only after FY22. Strong volumes building up on Force Motors as well, and Vodafone Idea. Kumar Mangalam Birla has been appointed as non-executive chairman, so that's providing a sentimental breather to the company. Cohance is also up 60% in the last 1 month. In fact, the flip with Umang Vora joining in is what is probably working in its favor. And you have Netweb Technologies, where your FY26 revenues have actually surged to 90%. So that's what we're watching out for. But let's head across to Puneet to take the rapid fire with Lakshmikant Shukla from Yes Securities.
Well, Lakshmikant, very good afternoon to you. Thanks so much for joining in. The first stock, Embassy Developer, stocks up and locked in upper circuit as well. But what's been the larger trajectory on this one, and what should investors do and keep this on their radar?
Embassy Development has seen a gap up opening today, and now it has surpassed previous swing high. But overall, structure is still on the bearish side, as secular trend is on the is trending lower. So until we see any decisive move above the levels of 61 to 64, we will remain slightly negative. And if it breaks the key support levels of 55, then further decline is possible on the lower side.
Lakshmikant, let me put across a couple of stocks, Signity as well as Coforge. Now, of course, Coforge has acquired Signity, but on the charts for both of those, what's the outlook?
See, Coforge has already gained around 10%. So overall sentiment is on the bullish side, and we are also quite positive in Nifty mid-cap IT space. Look at the trend of the Persistent. It has found support from its ascending trend line, and so we could expect upside move in Persistent as well as in Coforge. So we could expect current momentum will continue in Coforge, and probably it could surpass its previous swing high, and we will see 1,350 levels soon in Coforge in the upcoming sessions. And the support which I am expecting, it is trending on the downside toward the levels of 1,240 to 1,230.
Good. Well, that's a big upside coming in on Coforge from Lakshmikant, but also on Elecon Engineering. Results had multiple one-offs, but on the charts, what does it suggest?
For Elecon Engineering has seen decent upside move. A few days back, it has also surpassed its previous swing high of 525 and is still trading above this level. So we will remain positive till it holds this level. Now further breakout is expected once it crosses the levels of 575 to 580 range. Once it crosses this level, then after we will see further bullish momentum in this stock, which could push it higher toward the levels of 600 to 610 range.
Also on network tech or Lakshmikant, because we've seen a very strong up move, then some pullback from the highs. Is the momentum back right now on this counter?
Yes, probably this stock has seen a consolidation breakout in today's sessions, and 2 days back it has seen some sort of decline, but that decline has bought with the formation of bullish candle, as in today's sessions it has already given consolidation breakout, so we could expect higher momentum in this stock. Support is intact around the levels of 4200. As long as it holds this support, positive view will continue, and we will see upside move toward the levels of 4650 to 4700 on the short term basis.
And a very quick view also on Wokhard, another result which was a very strong one in this quarter. Very quick view on Wokhard as well.
Wokhard has also seen a positive momentum, but it has already gained around 13% on the daily chart. So I think one should wait for the dip around the zone of 1580 to 1600 levels. I think that would be the good levels to take entry. But the traders who had already bought this stock can continue to carry this momentum and can expect the upside levels toward the zone of 1800 to 1820, and our view will remain positive till it hold of the levels of 1550 on the downside. So wait, if someone want to initiate fresh long, then one should wait for the dip toward the levels of 1580 to 1600.
And the last stock on the radar, Force Motors, that's one yesterday launched a new model as well, but it's off from those highs of almost 25,000. Is there enough evidence on the charts to suggest we can go back to those levels?
After few days of decline, this stock has seen a positive momentum on the upside, but still having multiple hurdle around the zone of 21,400 to 21,000 zone. Until we see any decisive close above this level of 21,400, I think one should be cautious. But if it is able to surpass above the levels of 21,400, then we will see revival on the upside, and we could expect this pullback move to extend higher toward the levels of 22,400 to 22,500 zone.
Got it. And just one more, Lakshmikant, since we've seen a very big up move on Cohance in the last 1 month, as of course driven by a change in management, but on the charts, do you think that, because stock had fallen almost 58% from the highs in the last 1 year, now up 60% from the lows, but is there enough momentum even from these current levels, or will we see some respite from here?
No, yes.
Cohance Live, Lakshmikant.
So, for this base the levels of 450 to 440 kind of range, and from there we have seen the formation of bullish candle. Further breakout is expected of the levels of 500. Once it started trading of this level of 500, then we will see more bullish momentum in this stock toward the levels of 630 to 640 range.
Right. Got it. Well, thanks so much for that, Lakshmikant, giving us your view across a bunch of stocks. But Hiral, back to you for what's trending on Google right now.
The trends are always very interesting, because yesterday we did see a Idea Forge which was trending today. Sorry, you have Idea Forge which continues with gains of 2%. CAMS was there on the list yesterday as well. Vodafone Idea, PNB on the back of earnings, and HFCL. In fact, Lakshmikant, let me come to you when it comes to two names. One is Idea Forge and Vodafone Idea. Both of them seeing some good momentum in trade today. Would you still be a buyer at current levels? Okay, I think we have an audio issue with Lakshmikant, but the trends are really strong here, where volumes have also been picking up. But thank you, Lakshmikant, so much for joining in. It's always a pleasure to speak to you as well. But moving on, Raymond has reported its Q4 numbers. Let's quickly look at the profits down around almost 99% at 1.1 crores versus 133 crores, though the stock is at the day's highest levels. And the loss is because of a one-time loss of around, the profit number is lower. There is a one-time loss of 20 odd crores. Revenues have grown 8%. Margins have also improved substantially, 5% versus a 9.8%. And there has been a tax credit of around 7.8 crores this time around. So it's a decent growth, mainly driven by auto components. Let's get in Gautam Maini, CEO at Raymond, to talk to us about the quarter. Gautam, welcome to the show. Always a pleasure to speak to you. Yes, the profits have dwindled this time around. Would you say this could be a one-off? And how are you looking at an entry in terms of FY27 with how Q4 has panned out and with what's happening globally?
So just to tell you, it's the consolidated performance doesn't actually give you a true and holistic representation. So what I'd like to do is to focus a little bit on the two segments which are actually contributing to a more significant growth. So if you look at these segments, it's basically aerospace and the automotive. Aerospace has grown, 26% year on year on the revenue side and 25% on the EBITDA side. And the precision technology and auto has grown, low double digits on the revenue and over 34% in the EBITDA side with a one-time, profit of 13 crores. So both have actually done, in spite of tariffs, in spite of the wars and everything else. I would say both the segments operationally have performed very well and as per what our expectations have been. So in that sense, I would say that it's turned out to be a good year. And we expect the same momentum to carry on in the next year. If you look at the aerospace story a little bit in particular, there's a global backlog of 17,000 commercial aircraft, which represents over a decade of revenue visibility. So honestly, it's not anymore a position of your market position or market order. It's more about execution. It's about how you can do this in a high mix, low volume segment, how you can make use of scalability and experience to take the business to another level. And I think that is the critical thing, because many of these businesses have huge walls and you need 2 years, 3 years sometimes to get approval from these OEMs. And we have over 25 global customers now, and that helps us to scale the business.
That's an interesting point that you make, Gautam. So my question then is, the focus categorically is the engineering business now, right? And you're looking at sunrise sectors like aerospace and EV components that will drive growth. So what is the estimation that you have in terms of the engineering revenues over the next 2 to 3 years? In addition to that, where do you see margins and operational performance settle in or normalize from here?
So basically, if you look at the details, the growth will continue to be in a similar fashion. We will continue to grow both the precision and automotive sector as well as the aerospace sector. In the precision and automotive sector, particularly, we did a lot of work on the hybrid sector in the global market, and we made some very good inroads there. And that market has been growing. So we played on the right spaces in the right markets. Both revenue and EBITDA, revenue in the automotive and precision will be in the lower teens. In the aerospace will be around the 25% mark in terms of growth. EBITDAs, because of operational performances getting better, favorable product mixes that have happened last year, and that will continue this year, will also help us to keep our EBITDA margins pretty much like how they have been last year without the exceptions. So all looks good to keep the same momentum.
Well, Mr. Maini, good afternoon. Thanks so much for joining, and it's Puneet this side. Just what you mentioned on commercial airlines and how big of aerospace could be a division. We're also seeing multiple larger players also enter within India. What's your right to win strategy in that sense? Is it largely just the execution that will drive the gains in terms of order book wins also? Or is it that because the opportunity is so big that the early movers get the advantage?
So the opportunity is very big. We've been in this business for 22 years. We've had the early advantage. We also started, if you remember, with the engine segment, which is now a lot of people are paying attention to, which is the more difficult segment, because in the engine segment, you have more complexity. You have very difficult materials like Inconel and titanium, which are not easy to machine. So we took the difficult path, and that's paying off now because we've been able to then get on the best global OEMs from both Europe and US as part of our customer list. And that's helping us to go up the value chain quicker. It takes a long time, and hence you have to be patient to grow. But we've now reached a stage where you may have heard of our Andhra story, where we're going to do the next phase of growth. So all of that is planned on the basis of the last 22 years of experience. And now we will unleash the future based on that relationships that we've built and the strategies that we have to go up the value chain.
So just a perspective on your order book, because 2,350 crores, while quite strong, what is the execution timeline for the same? Is it that it can go down, or these orders will be executed in the next 3 to 4 years? And what's the order book number that you are targeting? That is it essentially doubling in the next 5 years? Is that something that could be on the cards?
So the order book will keep increasing. What happens is you typically have 5-year or 10-year contracts, so depending on when the contracts are expiring, you will be renewing them. But I think what is more important is the growth in those order books, and that growth happens on literally a monthly, quarterly basis. And this is only the current situation. With the growth that we are targeting, this is expected to continuously increase at a larger pace. As we get more complex products and longer term agreements, the order book will then see significant rise as well, depending on whether it's a 5-year, 7-year, or a 10-year order that you particularly do in a certain contract. So I would say this will only grow. The pace will be determined by the combination of products that you will get over engines, structures, systems, landing gears, hydraulics, fuel. We're in all of these different areas because we're basically high precision machining. So we go across the entire platform of the aircraft.
Okay. Gautam, we were having this interesting conversation with regards to what's happening with EV and what's happening with hybrid in the newsroom a couple of days ago. And I do remember you mentioning that hybrid market is stronger right now versus the pure EV market. If you have to look at that aspect, how is FY27 actually shaping up in terms of an order book balance between the two? And what's that trend that you are seeing between hybrid as well as EV?
So I'll separate the marketplaces. What I referred to last time was the export market purely and not the Indian market, because the Indian could have a different story. The export market, especially in Europe, is pretty much hybrid driven now, and the EVs have taken a hit relatively. They're not gone, they've taken a hit. So our bet on the hybrid market has been very good. We look at the hybrid market itself growing between 10 and 15% this year for us, which is quite a significant growth in that particular segment. So we are pretty bullish about the hybrid market, and we are also looking now to take this to other customers that we have. So hopefully that will continuously grow, not only in Europe, but also in the US.
Follow up, are you seeing a similar trend develop in India as well?
I would say in India, the pure EV market is pretty strong. India is a very price conscious market, and hybrid gives you a great solution for longer distances. In Europe and the US, you need to travel much more. Whereas, in the Indian cities, your EV has enough battery capacity to get you through. So I would say the trend is not the same in India. I would see that the EVs would be more popular than pure hybrids in India, but it's the other way around in the European and the US markets, as per me.
All right, Gautam. Thank you so much for speaking to us at NDTV Profit. Always a pleasure to get insight. So that's the management of Raymond Limited citing what's in store in terms of FY27 and the trends that he's picking up so far. But moving on, the cabinet has cleared ECLGS 5.0 targeting a 2.55 lakh crore in fresh credit flows. Now, this would be a potential game changer for small and mid-sized businesses. But how are the lenders actually viewing the rollout, and who gets impacted by the scheme? Let's get in Piyush for more details. Piyush, over to you.
Yeah, that's absolutely right. This is a very big positive for the MSMEs, and bankers have become more favorable in terms of lending to small and mid-sized companies, especially those who have an export-focused business. We do understand in the last set of ECLGS scheme, when it was rolled out in COVID, the delinquencies were not much high, and not each MSME actually opt to get this dispensation as well. So we are talking to bankers, especially the public sector banks are looking at growing their MSME book quite sharply, because they're actually aiming to grow their RAM, which is retail, agri and MSME loans, because it helps them in terms of yield as well. So both from a business perspective and a growth perspective, bankers are looking very positively to this. MSMEs who are in the segments of engineering goods, textiles, apparel, gems and jewelry, chemical, pharma, etc., they are expected to be getting a fresh loans now from banks, and there is one clarity that some bankers are seeking, whether this dispensation will also be allowed for working for term loan, because the current speech and the current statement which has been put out mentions only about working capital loans. So that is one clarity bankers are seeking. Back to you.
Thank you so much for that. In fact, let me get in Tapan Doshi as well. Tapan, welcome to the show. Always a pleasure to speak to you. You know, Piyush actually got down details in terms of how the scheme would actually benefit a lot of sectors. I mean, aviation is one of them. You're seeing those kind of gains coming in for Indigo. According to you, what could be stocks that investors could look at on the back of the benefits that are flowing in?
This is good for banks. Now, if you see, a government guarantee somehow, a cushion will always help the bank, and it encourage MSME loan sanctions. Okay, again, lower credit cost pressure will be there. Again, better loan growth will be there from here. So if you ask me which are the banks, then I think MSME heavy lenders like SBI, Bank of Baroda, PNB, in the large banks will be benefited. Small business banks like AU Small Finance Bank, Ujjivan Finance, then Equitas Small Finance, and they are the banks now which will be benefit, because government is coming in between also a little bit helping through lending, guaranteed lending and all that. MSME and NBFC, even because of low credit risk, like Cholamangalam, even Shriram Finance will be beneficial. So aviation, as you rightly said, both SpiceJet and Interglobe Aviation will be benefited out of this. So yes, it's a good package which will benefit both the MSME and the banking and lending businesses.
Got that view, Tapan, and welcome to the show. But Bajaj Auto continues to be a stock that's in focus today. Results come out today, but more importantly will also be the buyback amount as well as the price that they decide to do. So in terms of the results specifically, is expected to be over a 25% growth. Revenues looking to rise at 15,700 odd crores. EBITDA margins at 20.4% will continue to be the focus. Profit also at 2,615 crores will be a key one to watch in this particular quarter. But more importantly will be the buyback. Now, we've spoken that this is the second buyback for the company in the last 2 years. Last was in 2024, where shares were bought back at 10,000 rupees. Post that, we've seen an up move, but back to those levels yet again. So could be very interesting the amount that Bajaj Auto decides to buy back the shares at. 4,000 crores was what the amount was in the last buyback, and 2022 shares were bought at 4,600, which was a 2,500 crore buyback. So that would be one of the major ones to watch out for. But also in terms of the other key aspects to watch, Tapan, how are you viewing this counter now? Because we see that KTM also was one of the other growth areas for the company. Outlook for FY27 will be something to watch. What's your opinion?
Well, it will be wait and watch, Puneet, now, because we have to see what will be the buyback price, and also, but overall, of course, the last 2 quarters were positive for Bajaj. If you see their export recovery is good from here also. Premium bikes now is scaling high. Chetak EV expansion is very good. The only thing is we have to see now raw material prices, if it goes up because of this war scenario and all that. And of course, EV market, a lot of competition there, whether able to contain that margin or not. Now the stock is not so cheap as it was used to earlier, as the stock has already gone up. So it will be wait and watch. I think we have to see the buyback price and the performance of the quarter, then only take a decision.
Got that view, Tapan, but its peer Hero MotoCorp was also in focus today. Results came out yesterday, a very strong set of numbers, over a 29% growth seen in its revenue, but largely conference call today focused on the future. Now the company has mentioned, Harshvardhan Title, the MD of the company, has mentioned about a 1,500 crore capex that the company is looking to do in the next year, and this will help in doubling the EV capacity. Listen into what he had to say.
In Deluxe 125 segment, we did have a dip in the very first quarter of last financial year, but thereafter, for 3 quarters, we've been gaining share quarter after quarter. Going forward, our investments in these growth segments will continue. We are investing in capacity expansion, and we have committed over 1,500 crores of capex in FY27, and this capex is going to expand our capacity in scooters, where for some of our models that are doing very well, we are doubling our capacity. In EV, where in fact in a matter of a month, we would double our capacity from where we started last year, and then further down the road in few quarters, there'll be further doubling of capacity as we are seeing great momentum for our Vida brand.
Okay, so that's Hero Moto. But moving on, United Breweries and United Spirits, both of these counters are in focus on the back of earnings, both trading under pressure. Now, United Breweries, the overall growth has been disappointing on the back of cost pressures. Volume growth is better than expected and margins have contracted as well. They're expected to see 400 to 500 crore cost impact in the next 2 to 3 quarters due to the Middle East conflict. Likewise, if you see United Spirits as well, FY26 sales growth is up around 7.7%. The net sales value growth is 3.7%, and FY26 is around 7.7%. Prestige and above category growth is at around 5%, so that is what has led to this growth. And you have a popular segment which is degrown 13%. Both the stocks trading under pressure. Tapan, your views when it comes to United Spirits and United Breweries?
Both the stock is facing the input cost pressure. Now, if you see, even the state regulation is actually quite unpredictable. That is why also you can see the volume hit also. Summer demand, we have to see how will be the impact. But from here, I think hopefully they are able to sell more premium brands, then the margin may improve. But from here, I think still both the companies will see a little bit pressure both on volume front and the margin front. So I'll wait and watch. Currently, I don't see any buy at both the levels.
That's with regards to where both of these companies go. But thank you, Tapan, so much for joining in. Always a pleasure to speak to you as well. And the other two stocks that we were going to talk about today is L&T as well, where you have brokerages which are not really happy with the way the commentary has been for FY27. So that stock is the top losing stock on Nifty 50. And you have Coforge, an interesting one coming in there because their executional order book is seeming very strong. And their Q1 FY27 revenue is going to be flat. QOQ is what you're watching out for. The stock up 8.5% as we speak. But completely out of time with that, it's a wrap on this edition of Trending Stocks from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Continues on the last street as Nifty trades near 24,000 mark. Broader markets overperform as well, and major sectors trade in the green, barring FMCG and energy. Coforge, meanwhile, delivers a standout fourth quarter profit, sharply beats street expectations on strong execution and margin expansion. Brokerages turn more constructive, citing improved growth visibility, better margins, and a healthy deal pipeline heading into the new fiscal. L&T, meanwhile, is in focus after missing revenue and EBITDA estimates, with margins slightly below expectations as well. Profit growth stayed modest, but management struck a confident note and guided for steady growth through FY31 despite near-term pressures. Meanwhile, the cabinet has cleared ECLGS 5.0, unlocking 2.55 lakh crore of guaranteed credit to ease liquidity stress for MSMEs as well as mid-sized firms with zero guarantee fees and quick access. This stands to benefit export-oriented MSMEs, restaurants, and other businesses navigating global disruptions. Oil, meanwhile, extends decline as hopes of a US-Iran deal lift sentiment, pushing Brent toward $108 a barrel. But with Hormuz still effectively blockaded and supply recovery delayed, markets remain caught between de-escalation headlines and persistent disruption risks. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about, whether you talk about sectors or the Nifty 50 as well as the Sensex, you're looking at a little bit of a weak picture right now. So Nifty just a little bit, close to its day's lows as well, and Sensex also about 180 odd points cut coming in. On the Sensex, you do have the sectoral picture that is also tilted in the favor of green, at least at this point in time. So there's actually energy, oil and gas, FMCG that are on the back foot in terms of the sectors. And other than that, when you talk about pharma, realty, auto, and financial services, as well as rural and metals, those are some of the sectors that are shining quite bright right now. When you talk about some of the list of losers as well, there's a bunch of counters that make it to that list from within the broader universe as well, and from within the Nifty 50. Now, when you talk about something like a KPIT Tech, Exide, Schneider, Ather Energy, those are some of the counters that are down from the broader universe. And when you talk about Nifty 50, L&T, of course, on the back of its earnings, 3.4% knock. Benchmark Reliance as well, also trading with a cut of about 2%. And on the flip side, you do have a bunch of counters like Dr. Reddy's, Trent, Interglobe Aviations, as well as Cipla and SBI Life in good shape right now. But that said, let's also quickly take a look at the world of commodities in terms of what that is also doing right now. Now, you do have gold as well as oil that are in focus, and let's also get you some important insights. In fact, Vandana Bharti, AVP Commodity Research, SMC Global Securities, is joining us on the show right now. Vandana, first things first, I wanted to try and understand what you think about the decline that we've seen of late when it comes to oil prices. Now, prices are still elevated, so there's actually a couple of kind of triggers that you're looking at, isn't it?
Yeah, this is because of the pause on
Project Freedom, and they won't squat ships. So this is a relief for the market, and because of that, we have seen a decline in the prices. But it is too early to say that they are reaching to the peace deal and all, and the prices will move down soon. It will see support near the level of $95 because it is completely decoupled with the spot market. They are paying $150, $135 for crude oil, and in WTI it is only $100, and Brent is showing $115, $110. So this derivative market has been decoupled with the spot market for the time being, and it is the main problem of this market. So yes, very limited downside in oil is right now expected from my side, and it is $95. From there we can see an upside in the prices, because any time we see de-escalation or escalation issues or statement coming out from Iran and US.
No, absolutely, and that decoupling has been quite interesting to also witness, Vandana, just like you rightly pointed out in terms of the spot and futures prices. But when you just talk about the fundamentals and put the contract aside for a bit, just talk about fundamentals for crude as well, you're looking at thousands of tankers, vessels that are still remaining trapped in the Hormuz. So do you think that the entire upside for oil prices still very much remains? And do you think that the baseline has also shifted for oil prices? Because some of the infrastructure worries, they're not going to go away, and they're not going to be fixed for at least a few months to years.
Agree with you, because if we consider the data, because it should be based on the fact check and data based, and day before yesterday only one ship crossed the Hormuz, and the normal data is 130, 126. So this is the intensity of how much serious is this problem, and they are considering the longer route. Ultimately it is increasing the freight charges, insurance charges, and despite that only 30% of crude is reaching out to the destination. And this is going to completely uplift the base case of crude oil. Earlier it was $65, $60. Now it is $85 to $90 for 2026 if the problem persists here. And then we can see the higher side of, in fact, $115, $120, because this is the price level which market is indicating. And there is a worse condition in physical market. And if we consider the Indian import crude basket, it is telling the whole different story.
In a very different story, and we'll not get into that because we briefly touched upon that as well. But when you talk about gold prices, a little bit of a rebound that you've seen, Vandana, largely, do you think it's just the weaker dollar, or do you think that it's the entire safe haven demand picture that is shifting right now for gold? What are the current factors that you're looking at when it comes to this little bit of upside that is yet again emerged for gold prices?
Yeah, this is because of whenever we see a kind of de-escalation news, gold prices, it generally jump this time. So because of the crude oil prices and downside in dollar index, it is moving up. And second thing is that we have the bad data. They are they have started to come in the market, and we have seen a very weaker data from few of economies. Chinese real estate market, it is not doing good, and Bank of Australia, it has increased the interest rate. So the we can say that the circle of we can say that interest rate rise, it has already started, and it is giving a pressure to the equity market as well. So it is not always like the higher interest rate is giving a pressure to the gold prices because of the weaker data. Gold is again up because of the safe haven buying, and dollar index is down. So because of that, we have seen a safe haven buying return to this counter, and we are getting continuously like bad news from political front, economic front and all. But yes, this time gold has limited upside near the level of 47 up to the level of $47.15 to $47.50, and there we can see a halt in the prices, because ultimately this crisis is creating cash crunch.
No, absolutely, and that cash crunch could be, very visible when it comes to certain pockets of the market, and that's also something that you're looking at in terms of the reflection of trading behavior as well at this point. But when you talk about the medium term, or any sort of timeline that you have in mind when it comes to gold prices, where you do see gold staging a decisive upside?
It may take the month of May to July, because if we consider the last war of Ukraine and Russia, Earlier, we have seen a rise in the prices of gold, and we have seen the consolidation of 4 or 5 months, and it is happening right now in gold prices. After that, we have seen a bull run from $2,000 to $5,600 kind of level. So longer the consolidation, higher side breakout is expected, and higher upside will be expected in the market. So $4,600, $4,500 is becoming a new support level for gold prices. From there, the prices should take an upside, and this time we are expecting, first of all, we are expecting 5,200 kind of level till the end of 2026, 5,200 to 5,400 kind of level. But yes, this structural bull run in gold will continue in 2027 as well, because as soon as the war will end, de-dollarization will happen in faster pace actually, and because of that we have seen a quick rally in gold prices.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at it. Thank you so much, Vandana, for taking time out and joining us. So there you go. That's a sort of double update also coming in. Not just a price level, but also a month to really watch out for. May to July, expect a little bit of a range-bound move when it comes to gold prices. After that, you can expect a little bit of a pickup, at least when it comes to gold. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about some of these counters that are in focus right now. So something like L&T in fact stands out, and you do have brokerages also that have come out with a little bit of a bearish call, especially Nomura, and they've also downgraded it to a neutral rating. They've cut the target price as well. Now the stock, of course, is under pressure right now, and you do have about a 3.5% downtick coming in on this particular counter. Now, in terms of brokerage verdict, they're talking about, Nomura specifically is talking about how there's a muted performance when it comes to the fourth quarter, and a little bit of underwhelming guidance also that makes it to their radar. Other than that, they've also cut the FY27, FY28 financial year earnings estimates by up to 8%. Now, they're also less optimistic when it comes to the order inflow momentum, and that's also crucial to take a look at. In terms of valuation, they're talking about how there is less valuation comfort given some of the near-term uncertainties and limited visibility. But with that in mind, let's also move on and get you the word coming in from sources. In fact, sources are telling your channel that Zee has sought an expanded undertaking from Nykaa in the ongoing copyright infringement case. Nimit Dixit is joining in with all of those important details. Nimit.
Yes, absolutely. So in an ongoing dispute that's been going on since April between Zee and Nykaa, where Zee has sued Nykaa for copyright infringement, saying that in its Instagram reels, which we all watch in the ads, whether it's through influencers or its own channel, it's been using music for Zee. Now, Instagram rules say that for personal accounts, that's fine. You're allowed to add a song to your reel. But when it's a business account, then it becomes a commercial use and that is not allowed. So that copyright violation stands. On the basis of that, they identified 12 different reels, and while now Nykaa has taken down those 12 reels and removed those songs, but Zee is still unsatisfied with that. What Zee says is that it apprehends that Nykaa in the future will again use this, so it's not happy with this undertaking. It's asking Nykaa and asking court to direct Nykaa to give a larger undertaking whereby it is disallowed